Good morning, everybody. It's 8:58. I'm a couple minutes early, so I'm going to ramble uncontrollably. You guys won't be able to stop me. I had extra coffee this morning. How's everyone doing? It's Friday, guys. You made it. 8:59 a.m., June 9th. Market's going up and down, and we're looking for opportunities. Excited to be here this morning. Good morning, Mike. Nice to have you. Um, Guys, my name's Mark. For those of you that don't know me, I think everyone here does. It's okay if you don't. We're going to talk about rules again today, guys. You know, someone came in the room yesterday. They go, man, I can almost predict what you're going to say. I love that. That means I'm consistent, right? The message isn't changing. The message doesn't need to change because it's a good one. I'm going to give it a few minutes. We'll see who files in. Not everybody shows up early. I'm a little bit of an overachiever some days. Pull that down for a minute. We'll look at this. We'll go through the news. I'll slow roll into the day, guys. But every day I go to forexfactory.com. And I'm just looking to see if there's anything going on, guys. There's Friday, June 9th, and nobody has anything to say about anything, right? No news, no high impact, no low impact, no medium impact. So we're just going to trade away, right? Wait for those rules to be met. Guys, I do check news every day because it's important to understand when there's news releases that may affect the way the market flows. No news is good news. Yeah, unless the market's stuck, and then I like a little news to wiggle it loose. But it lets me know when the market might spike or jump, or it may trade so rapidly that I can't keep up with it. So when I see these high impact newses, and you don't even see one this week, if you see a medium impact news, where's my little, I was kind of looking to see if I could find that map. High impact, low impact, medium impact. Guys, these are the ones that we're looking for. These are the ones that can move the market. Just being aware of when news is coming out, not so much worrying about what it says. Just because, you know what, we don't control the news. We don't react to the news. We just want to be out of the way when other people react to the news. So every morning I go to forexfactory.com. I take a look. And then I go on with my day. I usually do this when my charts are loading. First cup of coffee's going in. And then from the Forex Factory page, guys, I like to bring you to the education page. And this is where everything that I talk about comes from. There are no secrets with Nexgen, guys. We don't give you some of it and then charge you for the rest of it. Today we're going to focus on simplicity. We're going to focus on a plan. Everything that I talk about comes from this education page, the tutorial section right here. Anything and everything that you need to be successful as a brand new trader, as a user of the Nexgen software, is available for you from this education page. Everything that's on this education page can also be found in the Discord stream, guys. 101 Basics, trigger reading, short version, learn more, user guides, trading rules, market flow as you begin to get a little more advanced, chart reading, guys, example trades, video uploads, useful links, everything that you could possibly need is made available to you. I'm going to talk to you about the looks, why we're looking for them, the advantages they present. My goal is to keep it simple. I know that we have some new people in here. Good morning, Selena. It's nice to see you. Welcome to the classroom. Guys, remember that this is your class. It's not designed to be a 3-hour lecture, guys. I want it to be a 3-hour discussion. And there is a very clear path to getting you to where you want to be. Most of you are going to fight it in the beginning. I don't know why. I don't know why I fought it in the beginning. But guys, it's really a simple path. Post your trades in class. The whole idea behind this interactive classroom where you have the ability to post your trades is that I'm going to provide you feedback every day, 15 hours every week live. Every time you have a question, we're going to have a discussion. Every time you take a trade, you're going to post it in the room. You're going to write your rules on that chart. We're going to talk about what you see. We're going to talk about what I see. We're going to compare the two. And we are going to really gauge everything that's going on your charts around the advantages present or perhaps the advantages that aren't there. The idea is that you're going to create confidence through the memory of success. You're going to go through repetition is going to create awareness and trust. And it really revolves around you being willing. Make yourself a little bit vulnerable. Post everything that you do in class. And even if it's not a trade, maybe it's a chart read that you need a little help with. Once you post it in the room, guys, I'm going to give you feedback. That's really what the second hour of classroom goes around. The first hour is going to be revolving around rules, learning the trigger lines, the Fibonacci rules for when it's okay to trade. The second thing that's going to get you to where you want to be the fastest, guys, is use this spreadsheet that Nexgen provided for you. I'm going to pull mine up real quick. The spreadsheet has 2 pages. Pretty simple. One page is nothing more than a trend tracking or a trade tracking sheet, guys. Every time you take a trade, you're going to put it in the spreadsheet. You're going to talk about the conditions. Hey, good morning, 10K. Nice to see you. You're going to talk about how you felt, if your rules were met, and you're going to leave notes about what you think you did well, what you think you could do better. And then the idea is that every morning before you start the day, who did this morning? Who looked at yesterday's trades and said, you know what, I'm going to do a little bit better today? What worked? I know yesterday a lot of you guys traded with momentum and it worked out great for you. What didn't work? Some of you got run over trading in determination conditions. Make that note, right? This is what worked. This is what didn't work. This is what made me feel relaxed. This is what felt easy. And this is what felt forced. This is what made me nervous. Guys, 5 minutes every morning looking at this spreadsheet, seeing what you did yesterday, making you better for the day. That's my goal for you. Embrace this. This is one of the most underutilized tools because it feels like work. But guys, becoming a successful, a profitable day trader, it's going to take a little bit of work on your part, right? A little bit of participation in your own education. So post your trades, get them into that spreadsheet. Guys, the second page of your spreadsheet is just your personal trade setup looks. You're going to start a database of every time the rules are met, every time you take one of those great entries, one of those rules-based entries, and you're going to fill up your spreadsheet again so you can go back and study it. You're going to learn these looks so that they become easy, guys. When somebody posts in the room, and I say, man, that's a great looking trend trade. Let's see if I get lucky on this one. 10KM posted in the room. And 10KM says, with all this momentum, right? All this momentum, he's identifying the area where the market is likely to continue. And we'll look at the second picture. And then there's that short. Once again, great looking momentum, guys. We're going to talk about these rules. 10K, great stuff. Did you chicken out or was it the right thing to do? So this is going to be the segue to the next one. And this is what the second hour is. So 10K, let's take a look at it. You had a good top. What does that mean? 10K said that he recognized an area that may reverse the market. It's what we call a termination condition. And it did, in fact, reverse the market. And then it created this momentum that says that the market is likely to continue in the direction of the trend. And you said you got in at the mid-band, right? But you got out after the full bar on the large chart and the small triggers gone to the wrong side of small -6 ticks. You were going to get in at the 1-to-1, but fear of missing out, you got in at the mid-band. Did you chicken out or was it the right thing to do? Usually once the bar is formed, it keeps going. So 10KM, guys, I'm going to say this all the time. What are your rules for a trend trade? And if you have rules for a trend trade, do they mention a full bar on the 13.2? Right? Do they mention moving your stops? Do they mention... What are your rules? So guys, every time you take a trade and you post it in the chart or in the room, tell me why you did what you did. Tell me your rules specifically. I need odds favorable momentum, no termination conditions in an area for entry. And my rules don't say anything about a full bar, right? This full bar is just a pullback 10K, and it pulled right back to resistance inside of favorable large triggers. I think you chickened out, if that's okay, respectfully. I think you chickened out. This is one of those instances where that was your first entry, right? This was your potential second entry. And I'm not sure what the market did next, but you had the advantage of momentum, you had the advantage of a clear path, and you had the advantage of an area inside of favorable large triggers. My rules say, wait for a reversal bar, and then reduce my risk behind the reversal bar. But initially, I'm putting my stop up here where the market shouldn't go. And this one may have overrun just a little bit, right? Yeah, and it all goes back to trust, 10KM. And guys, I realize that we're getting a little ahead of ourselves for those of you that are wondering about the rules. But 10KM, is there anything about this chart right here that says you shouldn't be short? And this is where I always go back to, guys, and this message is going to tie around to a recurring theme through the whole day. 10KM, does your large chart say anything about this market isn't going down? And remember that your large chart's your entry chart, guys. So I'm going to break away from your picture for just a second, and we're going to talk about what it is that we're going to look for today, guys. And we're going to look for a high probability trend trade. And a high probability trend trade is only 3 rules, right? It's not 3 rules with 7 addendums that you put in to make yourself feel better. It isn't 3 rules with exceptions so that you can get more entries, so that you can break one of the rules. Guys, a high probability trend trade is a trade that typically wins 70 to 80% of the time. It's a trade that is an accumulation of 3 advantages: the advantages of momentum, the advantages of a clear path, and the advantage of an entry area. We're going to talk about each of these rules. You're going to be able to identify them. Really, by the end of the first day, you're going to be able to identify the momentum. You're going to be able to identify those termination conditions, whether or not you have a clear path. And you're going to be pretty comfortable looking for those areas, those lines inside of favorable large triggers, guys. And if you commit to your first 20 days with Nexgen, all I'm going to look for is this absolute best of the best. All I'm going to look for is this amazing entry that wins more than it loses. What you're doing is you're creating a plan that's capable of winning right out of the gates, guys. And when you're looking for that high probability trend trade, you're not only, hey, good morning, Philly. You're not only learning a trade that has the potential to win more than it loses, you're teaching yourself to read your charts, guys. And that's really the goal, is to be a chart reader. Because once you're a chart reader, every door you would ever want to open as a trader opens up. And we're going to teach you that through these rules. You're going to understand where the market is likely to continue, and you're going to use that point for continuation, initially for the high probability trend trade. Ultimately, you're going to use that area where the market is likely to continue, maybe as you expand your plan. You're going to understand where the market is likely to go. You're going to be able to use the T3 trigger lines and Fibonacci areas to make great decisions on where that market is likely to continue. And then you're also going to understand where the market is likely to stop. These areas that may reverse the trend, that may create a bounce, guys. Fibonacci coupled with T3 trigger lines is going to identify these 3 advantages. And your job is to study them and to become comfortable, to become confident, to ask questions when you're not. And this section says the first 30 days and beyond, guys, focusing on quality over quantity for the first 30 days. Focus on that highest probability trend trade. That trade, let's go to the glossary, where each indicator on every chart agrees for the trade, guys. Nothing in the way, strongest triggers, no termination conditions. Guys, this is the trade that's going to set the tone. This is going to give you confidence through the memory of success. And ultimately, it's going to open the door for medium probability trades, trades where there may be a small issue. But once you can read your charts, you're going to be able to identify that small issue. You're going to be able to manage these assertively because of your chart reading. You're going to be able to identify trouble spots because of your chart reading. So don't put the cart before the horse, guys. Learn this highest probability trade, commit to it, focus on it, embrace the advantages, And more importantly, guys, embrace the simplicity that this trade can be. It happens on only 2 charts. And guys, your 2 charts are going to give you all the information you need to get into the market. Your large chart is a broad stroke of a brush, guys. It's showing the overall opinion of the market. It's showing you really who's in control. It's going to define the momentum. It's going to define the direction. It's going to define the areas, guys. And your first 2 of 3 advantages, your first 2 rules take place on the large chart. Once they are true, you're going to go to a smaller, faster chart, guys. And on a smaller, faster chart, you're going to be able to refine this broad stroke of a brush. You're going to pinpoint with really amazing accuracy where the market is likely to continue, and you're going to use that point for your entries. Rule number 3 defines your entry point for a high probability trend trade. Guys, this is going to allow you to reduce risk, and it's really going to allow you to increase your profit potential. So what we're going to do for the first hour is we're going to talk an awful lot about the rules. We're going to see them visually, right? We're going to talk about the advantages, how they affect your trading, and we're going to look at examples of everything. Your job over the next hour is to ask a question. Hey, Mark, I don't quite get that concept. Can we revisit? And I will. I'll stop the class dead in its tracks to make sure everybody has clarity. But everything starts, guys. Everything starts. Every trade. I don't care what kind of trade you're taking. It starts with the T3 trigger lines. There are 2 parts to the trigger line. There's the small triggers, which are the faster moving indicator, the solid line that you will see on your chart. And then there is the large triggers, the slower moving. And these 2 work together. The first thing that they're going to do for you guys is they're going to help you define the trend. And it's pretty simple. If I'm looking at my large chart and the background is green, I'm in an uptrend, right? If the background is red, I'm in a downtrend. My job as a brand new user is to never fight that trend, to never form an opinion, but rather trade with the direction that's been established. This is really the first advantage that you're going to give yourself. It's not listed in the recipe for a trade, but what it is it's letting the large chart establish direction using the T3 trigger lines, because when your small triggers cross over the large triggers to the upside, that's when that background paints green. The small triggers pass below the large triggers, that's when that background paints red. Guys, you don't need to know how it happens, just look for the colors, but it's a precursor to rule number 1, and rule number 1 says that I must have strong triggers. And in an uptrend, when the background is green, the only way that I can have strong triggers is if the small trigger lines are above the large trigger lines. They're crossed up, and both triggers are wide and angled in the direction of the trend, guys. And embrace that word wide. Flat triggers don't provide momentum. Wide triggers in the direction of the trend do. And when I have that space between the small and the large, guys, the odds are favorable for the market to continue in the direction of the trend. Odds favorable momentum is a phrase that you're going to hear in class all day, guys. And when people are posting charts and you're seeing these winners one after the other, this is typically the look on their largest chart, guys. It's that odds favorable momentum. The market is likely to continue. And this is when the conditions are perfect for that pullback on a smaller, faster chart. You're going to see these tails on a 13.2 after the fact. If you pull it up and you scroll back, these are potential entries on the 5-1 when the conditions are right. In a downtrend, small's below the large are wide, they're angled in the direction of the trend. The odds are favorable for the market to continue in the direction of the trend, guys. Odds favorable momentum is step number 1. It's strong triggers. It is that advantage of momentum that's ultimately going to have you looking for the advantage of a clear path. But before you do, it's important that you understand when the small triggers return to the large triggers, guys, when they're wide, when there's separation, it's like scissors open, ready to cut. The only way you can cut something with scissors is if they're open. When they close, it no longer works, guys. When the smalls work their way into the large, we call this a weakening of the large triggers. When you weaken large triggers, anything can happen up or down, guys. The advantage of momentum goes away. It'll be ultimately up to you to determine whether or not you're willing to forfeit that advantage. But that simple recognition, guys, and this is my rule one picture. Feel free to steal these. Right click, save that picture as, put it into your spreadsheet. Anything can happen triggers. Weakened trigger lines, guys. This happens a lot before the market reverses. And this chart doesn't even have the benefit of Fibonacci on it, only trigger lines. When we have that odds favorable momentum, the conditions are right for a pullback, and notice how the market continues. It begins to weaken, and there's that reversal in the market again. We patiently wait for the odds favorable momentum. Guys, when those triggers are their strongest, the advantage is present. When those trigger lines don't agree, if the background's green and your triggers are red, it doesn't agree. You don't have momentum. If the small are up and the large are down, you don't have the momentum, guys. This is where the typical trader tries to predict what the market will do. There's no reason to predict. We don't ever have to be first, guys. This is where Nexgen users will sit on their hands. They'll avoid being stopped out a couple times in what is considered a choppy market. And ultimately, that odds favorable momentum will return. And rule number will be met, and you'll have that advantage of momentum. Guys, is everybody okay with that? I know I have a couple new people in here. So Philly and User Faith, give me a great big capital Y in the room if you're comfortable with this concept. Biggie Paul, nice to see you in the room. I saw you for a second yesterday and you disappeared on me. Guys, odds favorable momentum. This sets the tone for everything you do, and this creates a huge advantage as you look for a trade. Next, we have to make sure that termination conditions are false, guys, that there's nothing in the way, no areas likely to reverse the market. Like all the Ys. Thank you. And for you new users, this is a great roadmap for what you're looking at on your chart. Areas that may reverse the market can be divergence highs, guys. A divergence high is a magenta line. Everything that Nexgen does is visual, right? It makes it easy to recognize. This magenta line forms from a pivot. A pivot means the market went up and it came back down. When momentum is lost at a pivot, this magenta line forms. It lets me know that while price is pushing up, the momentum is lagging behind. You see it from a low as well. Price was pushing down. It ultimately went up. Since the momentum was lagging, the indicators are written in the background. You don't have to do any math. Awesome. Thank you for that, User Faith. It prints this magenta line. These areas might reverse the market. Also, yellow 1-to-1s, red Fibonacci resistance, blue Fibonacci support. Guys, these are all potential termination conditions. And if I go to the tops and bottoms termination area on the spreadsheet, they may reverse the market. In order to determine whether or not one of these Fibonacci areas has the potential to reverse the market, guys, all it is it's a two-part process. And I'm going to type it in the room. Write it down on a piece of paper if you need to. But everything begins with price reaches an area, guys. Those dynamic Renko bars are red, they're down, the trend is down, and then they come in contact with support. When price reaches the area, all you have to do is ask yourself, hey, where are my triggers? If your trigger lines remain above the area of support, guys, you have reached a termination condition. You are at an area that may reverse the market, that may stop the market, that may create a reaction that'll pull you out of a short position. Rule number 2 isn't met, and you no longer have the advantage of a clear path. The clear path is present if you reach Fibonacci support and no trigger lines break through, sit still. When both the small and the large triggers break through the area, guys, we consider that area to be clear. You have the advantage of a clear path. And this really is the simple process. Price reaches an area. If none of your trigger lines break through, the path is not clear, sit on your hands, wait for a minute. Allow yourself to have that advantage of a clear path, because when you couple it with momentum, small and large break through, the momentum is odds favorable. There's another one of those tails, one of those potential entries for a high probability trend trade, and you can see how the market continues up. So guys, just a simple two-part process. It's a small equation. Price reaches the area. Where are my triggers? And this is going to get you exactly where you need to be to make sure that that path is clear. I like to show a couple different examples, and I'm giving you all of these. Put them in the termination section of your sheet. So at a high, the recipe never changes, guys. Price reaches the area, and if the triggers remain below, then it's a termination. So you know what, Biggie? I'm going to talk about that one in just 1 second, because when those smalls break through but the large don't follow, it creates a different scenario. So right now I'm going to say, let's be able to identify when the path isn't clear. In about 3 minutes, we're going to talk about exactly what you just asked. That's a great question. On these divergence highs, guys, this pivot is not a termination condition. This pivot is nothing more than a loss of momentum. It's when price returns to the pivot. The trigger lines remain below. Now it's a termination condition. Price reaches resistance, triggers below. It's a termination condition. It may reverse the market. Price reaches one-to-ones. All the trigger lines remain below. It's a termination condition. John's going to post pictures, guys, while I talk about rules. Feel free to ignore them for a minute. So, guys, these are your termination conditions at a high. At a low, the recipe doesn't change, right? Price reaches an area. The trigger lines all remain above. Guys, there are no trades. The path isn't clear. You sit on your hands. Price reaches support. Price reaches one of those divergence lows, guys. This is your recipe for a termination condition. It's really a pretty simple recipe. And if you allow it to be black and white, if you allow it to be one option in the beginning, it's going to keep you focused on the best of the best. And now, Biggie, here is yours. We take those same pictures. No triggers through, no trade, no clear path. Rule number 2 is not met. Small and large break through. The area is broken. Now we're looking for that high probability trend trade. And then this is that third scenario, guys. When the small triggers break through an area, and the key is that odds favorable momentum. Man, you want the best of the best, that strongest trigger look. Because strong triggers can break things. Fibs will break. They break, they're more likely to break with odds favorable momentum. But when the smalls pass through and the large don't, we call this a 50-50 look. And 50-50 has nothing to do with your odds of success. It simply means that 50% of the trigger lines have broken through the area, 50% have not. When you have this look approaching a fib, the fib has the potential to break, but it's not a clear path. It hasn't broken until both the small and the large get through. And I use this picture too because you'll notice at the bottom, there was one of those 50-50 looks, and ultimately the market goes up, right? And here we had one of those 50-50 looks, and this time it broke. So when you have a 50-50 look, and we're going to talk about entries a little more, and I'm going to use John Novak's picture they just put in there. When you have a 50-50 look, making sure that your entries are perfect, that you're not forfeiting any other advantages, becomes real important with what you're doing. Where'd my picture go? When you're only working with the potential for something to break, guys, and you're looking at those advantages, you have the advantage of momentum, but you forfeited the advantage of a clear path. You're going to want to be sure that that entry area is perfect, right? That you're not giving up any other advantages, because it's no longer a high probability trend trade if that path isn't clear. It puts you into that medium probability scenario. So no triggers, no trade. Both triggers, look for the rules to be met. One trigger, let it be perfect, guys. Let your entries be perfect. 90% of what you do during a day is going to be chart reading. 90% is going to be waiting for those advantages, looking for that momentum, looking for that clear path. And here was a great example of that. Price reaches resistance. Absolutely no trigger lines break through, guys. Rule number 2 keeps you out of losing trades more often than breaking that rule puts you in winning trades. Price pulls all the way back to support. Trigger lines don't even come close to following, guys. We're not going long. We're not going short. Sitting on our hands waiting for that best of the best look, waiting for those odds favorable momentum for that clear path. Price comes up and it retests 2 forms of resistance. one of those divergence highs, guys, the trigger lines never come through. We call this a pivot stop out. This is your pivot. This is where they stopped them out, and that market reverses. Guys, these are powerful termination conditions. Trigger lines have to remain below. When it coincides with Fibonacci, it becomes even stronger. You'll see this look from a high. You'll also see this look from a low. Remember, this is just a pivot that's losing momentum. When price reaches that divergence low, trigger lines remain above. I have a termination condition. When this termination condition creates a full reversal, I call this a strong bottom, a good bottom. Guys, this is the precursor for your best of the best trades, because 5-1 trend trades that happen after a strong bottom, a termination condition that creates a full reversal, or a 5-1 trend trade that happens after a strong top, a termination that creates a full reversal, guys, this is your highest probability trade. This is the trade that typically wins 70 to 80% of the time. And then Biggie, when you're looking at those areas that have the potential to break, a strong bottom on a 50-50 trade increases the likelihood of success. Guys, strong tops and bottoms set the tone for the best of the best. Here you see the termination. Price reaches 1-to-1s. No trigger lines break through. Your large trigger lines go from red to green. Your background goes from red to green. Your smalls go from below to above. And there's another one of those tails, one of those high probability trend trades happening after a strong bottom. This is that 70 to 80% winner. Is everybody comfortable with the idea on termination conditions? Price reaches, no triggers through, sit on your hands. It's okay. Be a professional waiter. Guys, these are all advantages. Sometimes the market's going to twist from nowhere, guys. The market loves to stop at Fibonacci, but there's going to be times where people with deep pockets have other ideas, and the market may turn with a clear path. The market may even turn with odds favorable momentum and a clear path. I'm going to show you one more termination condition, guys, and this is going to be the only small chart termination condition. And it's 3 divergences, 3 losses of momentum in the same price range. It may terminate the trend. This is a very powerful condition when those small triggers work their way inside of the large triggers. What does that mean? We've got anything can happen triggers, and it's coupled with 3 losses of momentum, guys. This may turn the market, maybe for a little bit, maybe for the day. But you're going to see this on your small chart, 3 divergences in the same price range, whether it's from a high or a low. And it's going to help you identify on that slower chart the change that may be happening, guys. These 3 divergences are also going to help you manage your trades. If you enter a trade with odds favorable momentum and only 1 divergence, it's a great look. Maybe you take profits, but you notice those 3 divergences, you're still in a short position. You say, whoa, this market may be reversing, guys. You can get out. You can reduce your losses. You can increase your profits. 3 divergences on a small chart is going to help you understand a little bit when that change is coming. So that's the only one on a small chart that I'm respecting. Guys, I'm going to show you. I'm going to go to the market right now, and let's see if we can find a couple examples. A little bit of overrun, right? It happens now and then, but we didn't have odds favorable momentum. And guys, this is in the middle of the night. Pulls back to Fibonacci support, middle of the night, a little bit of overrun. And then once people start waking up, there's one of those 50-50s from a bad bottom, and it doesn't work. But price pulls back to support, all the trigger lines remain above, and it sets the tone. Right up to resistance, where absolutely no trigger lines have broken through, and look how the mark reacts to Fibonacci. If we scroll back a little bit, Fibonacci support absolutely to the tick, right? A little bit of overrun with weak triggers, not looking for a trade, but there's that odds favorable momentum in one of those tails. Guys, if you just scroll back a little bit, you begin to learn and trust in Fibonacci. Price pulls back to support, everything is above it. That support holds all the way up. Same pattern here, and that market comes from Fibonacci support to the tick. That market reaches resistance and absolutely no trigger lines break through. Guys, if you scroll back 10 days worth of data, you're going to see this enough to begin to respect it, to believe it. And when you wait for it, right, when you don't trade into these areas that are likely to hold the market, you're going to find yourself in a position where you're winning more than you're losing. So we have odds favorable momentum. Let me pull up our advantages and see where we're at. The large chart has strong trigger lines. The advantage of momentum is present. The large chart has no termination conditions. The advantage of a clear path is present. Guys, the only thing left in the equation is to turn your attention to the small chart. We're going to refine that broad stroke of a brush and we're going to pinpoint the area for entry. And you're going to do that by creating a window of opportunity. You're going to recognize where the market is likely to continue. During the live market, when your rules are met on the large chart, this is going to be your look on the small chart. And you are looking at a couple different things. You've made the decision that it's time to trade. Rule number 3, I'm going to type it out. Rule number 3 says that you're going to use a limit order. What does that mean? That means that you're literally going to wait for the market to come back to you. You're going to buy or sell a pullback, which means that when everything is going up, a pullback is a small retracement that's counter to that underlying trend. So it takes a little bit of courage and a little bit of trust, but you're literally going to have this market come down to your order and you're going to enter the market on its way down. And it's going to be at an area inside of favorable large triggers. There's your rule number 3, guys. It is the wordiest of all the rules, but it provides an entry in an area where the market is likely to continue. The key phrase is favorable large triggers. What are favorable large triggers? In order for a trigger line to be strong, it has to be wide. It has to be angled in the direction of the trend. Favorable large triggers are when your large triggers, which is just the 5-1 large slow-moving trigger, and your synthetic triggers, these stepped triggers, which is nothing more than your large trigger on your 13-2 chart. When they are wide, when they're angled in the direction of the trend, guys, the momentum is the absolute strongest, right? Small triggers outside, everything says up, but your window of opportunity is going to be its smallest. And when your window of opportunity is its smallest, your risk is going to be its least. So I'm going to share that picture with you for those favorable large. Ooh, what picture did that put in there? Copy that real quick. Favorable large triggers. There's your picture. Guys, let's define that window of opportunity. In order to find the window of opportunity, I'm going to use these pictures. The momentum is up on the 13-2, guys. The momentum says go. The path is clear. Everything on the 13-2 says that you should be looking for an entry. So you commit to looking for an entry. When the small triggers weaken on the 5-1, guys, your pullback begins with a reversal bar, a red bar after all of those green bars. And you know what? I'm going to go to the manual because I want to pull everything from the manual. When everything says up, you're just going to focus your attention on the large triggers. Are they strong? Are they wide? Are they overlapping? And identify the areas that are falling within them. And guys, the triggers are going to move during the trade. The areas typically won't unless it's a mid-band. Your areas to take a trade from can be fibs, mid-bands, or yellow 1-to-1s, guys. These are the areas. These behave as a bounce point. The key is that they need to be inside of favorable large triggers. So what we're going to do is we're going to wait for the pullback to start. The pullback begins with a reversal bar, guys, and this is how much heads up you have. You've still got probably 6 or 7 bars before that area is potentially reached. But when this reversal bar happens, you're looking at your favorable large triggers, you're looking at the areas inside, and you're creating what we call a window of opportunity. For a long trade, your window of opportunity is going to extend from the highest point of support to the lowest point of support inside of favorable large triggers. The reversal bar prints. Identify your favorable large triggers, your highest point of support to your lowest point of support that fall within those triggers, guys. If you have an area and it's outside of that window, that's not your window of opportunity. If it's outside of the large triggers, it doesn't belong in that window of opportunity. This line becomes the area where the market is likely to continue. In a short trade, the reversal bar prints. Fibs, midbands, or one-to-ones that fall inside of favorable large triggers, guys, this is where the market is likely to continue. You will see areas outside of those large triggers, guys. They're not a part of the window. You can pretend like they don't even exist. Your limit order is going to go just below the area of resistance for a short trade. It's going to go just above the area of support for a long trade. And why are we going from the lowest point or the highest point? Because your 13.2 has odds favorable momentum and absolutely nothing in the way, and we don't expect that small chart to be able to push against it too terribly hard. So when I create my window, I'm going to right click and I'm going to activate a limit order at the top, and then it's up to the market. If the market pulls back to that area of support inside of favorable large triggers, that highest point of support, guys, I'm now in a long trade. It's 79.21. I literally entered the market while it was on its way down because my large chart said that we were going up with momentum and there was absolutely nothing in the way. I enter at the top because of the momentum. I'm mentally prepared for it to bounce off the bottom. That's okay. It's within the window. The rules are met. Sometimes anything that wins 70 to 80% of the time is gonna lose, right? 20 to 30% of the time. It's a cost of doing business. Guys, small losses are a normal part of a positive equity curve. I don't want you to believe that every trade is ever going to be a winner. The chances are it's not. But we protect our capital, guys. And we're going to put a stop below that window of opportunity. We're going to put a stop where that market shouldn't go. Because if suddenly rule number 3 is no longer met, if that price isn't inside, I got you, Philly. I got you on both of those. Let me get through the rules, and then we'll go through TechSmith Capture. We'll do a full tutorial. Sound good? Perfect. And thank you for posting that. Some people will sit silently. So I got you in just a second. Guys, the market pulls back. I'm in. I have all the advantages. My stop is where the market shouldn't go. And guys, this is a trade 1,000 out of 1,000 times. I'm obligated to take this trade because of the advantages. Because my trading plan says, my trading plan says open up the right pictures. My trading plan, my simple approach to winning more than I lose says that when I have momentum, when I have a clear path, and when I identify that window of opportunity giving me an entry area where the market is most likely to continue, I'm obligated. I take this trade, and 70 to 80% of the time when I have these advantages, profit target gets reached. Guys, this is your path to success as a brand new trader. The only thing I want to see out of a new trader is this entry. It doesn't matter if you win. It doesn't matter if you lose. Sometimes it doesn't even matter if you broke a rule. I want to see that you understand these entries because great entries create manageable trades. Once this market begins to move in the direction of the trend, guys, I'm going to reduce that risk below. I see a lot of you guys showing me trades with 2, 3, 4 ticks of risk on a trade because you waited for that pullback. And because you wait for that pullback, your profit potential is increased. You have a longer distance to get to that next Fibonacci area. Guys, your job for the first 20 days is to just study. And the easiest way to study is to open up your 13.2 chart, and let's just do it together real quick, is to open up that 13.2 chart, and let's look for an instance where we have odds favorable momentum, when the small triggers are strong, when the large triggers are strong, when everything says down, right? And this is one of those potential to break scenarios. But if I circle the tail, actually, you know what? I'm going to put a square around the whole bar because we're going to kind of define the refinement process. And I scroll back. Do you see how this one bar is about 30 bars over here on the 5-1? Guys, when your rules are met on the 13.2, when you have the odds favorable, and you can scroll back and study this, circle that tail. Was it an area inside of favorable large triggers? The first bounce doesn't make it, does it? The second bounce comes right to that midband, right inside of those triggers, and ultimately it finishes the move. Notice that there were only 2 divergences as well. 3 divergences might be a termination condition. 2 divergences lets me know that it's slowing down, but the large charts win, right? Does that make sense to everybody? Just scroll back. Circle the tail when the rules are met. We'll do it again here. A lot of times I'll do this drill in the beginning, and I'll go to my templates and I'll take off all of my indicators because I'm only focused on that best of the best. If I circle this tail, look how it lines up directly at an area of support inside of favorable large triggers. Guys, your job for the first 30 days is to come through and take this picture. And you ready? Philly, we're going to go through TechSmith Capture real quick. If you're brand new with me, so this is Biggie, this is User Faith. Open up your TechSmith Capture and play along with me. And Safia, the answer is yes, I will, but I'm going to get through the rules first, and then we'll come through and talk about that. So Philly, are you ready? Biggie, you ready? Cool. Click that giant button that says Capture. Did you guys find it? If you go through your search bar and you type TechSmith or Tech, it'll come up. Open that one up. I'm going to click Capture. Once I click Capture, if I hover over only one chart, it's only going to give me one chart's worth of information. So what you're going to have to do is left-click your mouse up in the upper left-hand corner, and I want you to drop and drag. I want you to show me timestamps, and I want you to show me prices. Get that whole area in there, because what we're going to do is we're going to line up your large chart and your small chart. When you release the mouse, you're going to click on this, capture an image. Once I capture the image, here's your image preview. So far, so good, right? Guys, this is how you and I have a conversation. You can use arrows, right? You can use these shapes. Hey, Mark, this was my window of opportunity. These are my areas of support inside of favorable large triggers. This is where I took my entry. Most important thing that you guys can use is this call out button. And if white's not your favorite color, make it gold, right? Color of money. And I want you to write your rules on the chart. I want you to say I had, whoops, there we go. I want you to say I had strong triggers on the large chart. I want you to type it out because it's reinforcing those rules, right? I want you to say I had no termination conditions. And once you do that, come over to your small chart and say I had a fib, not a dib, I had a fib and a midband inside of favorable large triggers. Guys, the language that you use is going to help a lot because it's going to let you know if you understand the concepts, if you understand the advantages. It's also going to let you know if maybe you're breaking a rule. So once you have the strong triggers, no terminations, you have it. Guys, this is a perfect trade. This is a rules-based trade, and you can verify that because you've written your rules on the chart and you can see that they're met. The next thing that you need to do is I want you to come to this upload button and click on it. It's that blue button in the bottom right-hand corner. This is going to take your picture and it's going to send it to Screencast. Screencast is a giant cloud where all of your pictures are floating around. If you click copy, come over to the chat box. If you're using the pop-out, you have to hit Control-V. If you're not in the pop-out, you can just right-click and paste. Guys, you're going to post your picture in the room, and then when I'm done with the rules and we get into that second hour, I'm going to come through and I'm going to click on Philly's picture, and I'm going to say, all right, Philly, let's see what you did, my friend. I'm going to say, Philly, you had odds favorable momentum. That's a perfect read. Look at the space between the small and the large. This market was likely to continue in the direction of the trend. And I noticed that you hadn't reached an area, right? This one bar, we hadn't reached resistance. So not only did you have the advantage of momentum, you had the advantage of a clear path, you waited for your reversal bar, and you had your limit order right there at the area inside of favorable large triggers. Man, Philly, this is the absolute best of the best. This is the best trade that you could have possibly taken, right? This is your highest probability of success. And then Philly's job, after he gets that feedback, whoops, it looks like I just got bounced. Let me come back to you guys. Sorry about that. Discord waits for the exciting stuff, and then it kicks me out. Whoops, wrong one. You don't want to see me. There we go. Are we back, guys? So Philly, your job, Biggie, your job, Safia, your job, Gary, everybody, is to come into that spreadsheet, right? And I'm going to put that link in there. Whoops, I'm going to hit the wrong button. It's Friday. Is everybody with me? I want to make sure you guys can see what I'm doing. I'm going to post this link. What is today, the 9th? 6/9, right? Because I'm tracking my progress. What kind of trade was it? Man, it was a trend trade. How did you feel going into it? Philly told me, he goes, Mark, I was confident. I had every advantage that I could come up with. Little redundant. It's a trend trade again. What were the tops or bottoms? Did it come from a termination? Yeah, it did. What were those 13-2 triggers like, Philly? They were odds favorable momentum. What did your 5-1 triggers look like? Man, Mark, it was the best look too. They were strong. I can't believe that I even thought this thing might not work. Target 1 was 1. Target 2 was 1. And then, guys, the best thing that you can do over here is identify whether it was rules met or rules broken. Identify which one. Not yet, Philly. But on this one, I put perfect. Never miss it, right? Never miss this setup. This is the best of the best setup. And because it was rules-based, because it was 100% awesome, because it was everything that I look for in a trade, I'm going to go to my spreadsheet, and I'm going to post this link in here, guys, and I'm going to call it perfect high probability trend trade long, or I'm going to call it perfect long, or I'm just going to call it perfect, right? And I can come back and study this, and this becomes the foundation for what I'm looking for every day. Philly, did you get it in the room? I didn't see you post a picture in the room. Take a picture of it the way we just did it. Post it in there. We'll talk about it. So guys, if you've never posted a picture in the room, post one right now. You know, Biggie Paul, post a picture for me. I don't care what it is. It can be your desktop. All right, so Philly, let's go through the process. Do you have TechSmith? Just give me Y's. I'm going through my troubleshoot here. TechSmith is up. Well, there's your first problem. If you go to your search bar and you type tech, does TechSmith Capture come up? No worries. I'll be here. Just in case it doesn't, it should, but just in case it doesn't, there's a link to download it. It takes 38 seconds to download it. Let me know, and we'll get there. And then for those of you that aren't downloading TechSmith right now, how are we feeling? Is everybody comfortable with what we're looking at? Odds favorable, we did it. This is how you study, right? Once again, odds favorable, no terminations, circle a tail. What's it look like on the 5-1 chart? All right, new users, this is your trick question for the day. Was this a pullback to an area inside of favorable large triggers? My synthetics are flat. My large are green. It pulled back. It went down. Do you see how this wasn't a rules-based trade? It wasn't rule number 3. It wasn't that area inside of favorable large triggers. So what I'm going to do is I'm going to click on that circle and I'm going to get rid of it. This one didn't fit my plan. No matter what happens next, I didn't have the advantage of an area inside of favorable large triggers. And guys, because of the study you do, because of the trust that you create, you're going to be okay missing these trades without these advantages. Scrolling back again, circling a tail, right? What's it look like on the 5-1? Picture perfect, isn't it? Look at that pullback to the area of support inside of favorable large triggers. Guys, this isn't a difficult trade to recognize. It's not a difficult concept. The rules are easy. The rules are simple. I need you to allow them to be simple. I need you to allow it to be easy, to not overthink it, to not overcomplicate it, to stay super focused, hyper focused on the best of the best for your first 30 days. Create a plan that teaches you to read your charts. Embrace that plan that gives you all these advantages, right? That identifies where the market is likely to continue. Guys, I'm going to start sharing some stuff right now. This is a high probability trend trade checklist, guys. I want you to print this out. I didn't put the capture icon on your desktop. When you downloaded the software, user faith, it may be there. If it's not on your desktop, go to the search bar and just type in TechSmith. All of my salespeople tell me that they do this step, that TechSmith capture gets put on your computer. It's part of the indicators download process. Do you see it? And guys, there's nothing more important than being able to take a picture. So let's get everybody squared up and where we're at. Philly, do you have your TechSmith capture? And I'm totally cool pausing for a second, guys. And if you don't have your TechSmith capture, TechSmith, T-E-C-H, TechSmith. That's what your icon looks like. It might be down in your toolbar. You may have to go through. I guess I can't do it on this screen. You can search for TechSmith. Those are my desktops. But if you only write tech, it should come up if you have it on your computer. If you don't have it on your computer, which is cool, right? You got it? Awesome. Philly, did you get yours? Did you find it? It should be there. Biggie, did you get it? And TechSmith is just that easy way to take a picture. Look, I'll put mine right over theirs. It's a giant red button, guys. Click it, and it's just click and drag. Left click down to the right and release. You can take a picture. You can also take a video if you want. Guys, it's awesome to take videos of yourself trading, talking yourself through what you're doing. But we're just going to capture an image. Cool. And then vandalize that image, guys. Use those call outs. Use those highlights. Use those shapes. Use those arrows. Give me as much information as you can. Why you did what you did. Tell me what you saw. Tell me what you were doing. Oh, there it is. Biggie. Absolutely perfect. So the only thing to do next, Biggie, is to take that click and drag, and instead of just giving me one chart, give me both charts. Give me both your large chart and your small chart, and you're doing that by a big left click, drag it all the way down to the right, and release. And then what you're doing when you get both of those charts on there is you're being able to show me rules 1 and 2 being met over here and rule 3 being met over here, and it'll line it up. And then we can see that whole picture, right? We can see that whole thing. Guys, when you're trading, when you're going back, when you're looking at those things, remember that you're not trading tails on the 13.2. The 13.2 is providing momentum and a clear path. If I circle the tail, I want to make sure that it lines up with the rules for rule number 3, right? I want to make sure that that circle shows up in an area of support inside of favorable large triggers. Don't wait for those tails to form, guys. The market will be long gone. You have the advantage of a plan that shows you where that tail is likely to go. User faith, all right. I like it. How do you write on the chart? Easy peasy. So that same picture that you just copy pasted in the room, up top you have color choices. This is your arrow. Hey Mark, this was my entry, right? This is my shapes. It came from an area of support inside of favorable large triggers, but it's this call out button right here. Click and drag, left to right, top to bottom. And then once you do it, start writing on that chart. Tell me anything and everything that you want to tell me. Tell me about your momentum. Tell me about the direction. Tell me about the termination conditions, right? Tell me about anything and everything that you want to tell me about. And then once you do, you're good. And then Philly, you just did another one, right? So you captured the whole screen there. That's awesome. I can take your pictures. I can look at them. I can see what you're doing. Guys, this is how we have a conversation. So those of you that are new, this is one of the most valuable things that you can use, guys. And then Mike comes in and Mike says, hey, Mark, check it out. Both the triggers are through the fibs, which tells me that I have a clear path. All the triggers are up, but I'm not sure. It's not my best of the best look. But beautiful entries create manageable trades because of the looks, because all charts agree. Here's, guys, look at Mike's entry. Mike's entry at support inside, right below those favorable large triggers, right? Boom, boom, boom. Everything says up. Everything says go, and Mike's able to make some money. Mike, nice trade. It's a medium probability, right? The momentum wasn't perfect, but the areas were amazing, right? The direction was great. The trigger direction was great. Smalls outside. You had enough advantages to take a trade. It's a beautiful chart read. Taking advantage. So user faith, try and write a little on there. Philly, try to write a little on there. Biggie Paul, try to write a little on there. Let me know that you can do it. And if you have any questions, let me know, guys. Your ability to post these pictures is one of the greatest tools that you can use. Guys, I'm going to take 5 minutes. I'm going to go reload my water real quick. Feel free to keep practicing with those pictures. I'm going to leave you with the S&P. Second divergence stopped you on that one, 10K. That's okay. Guys, you're going to have rules to do what you do. You're going to have rules to get in. You're going to create a plan with rules to get out, and you're going to post them in the room, and we're going to talk about why you did what you did. And sometimes we're going to talk about how you didn't have to get out, right? So you write in the box, just keyboard, right? So I get this up, and I use the call out. So watch this. No, don't ugh. It's too soon for Uggs. You're brand new. Let yourself be. Guys, check it out. If there's no little cursor blinking in there, double click on the box. And now do you see how the cursor's there? And now I can type. If it's not there, no matter how much typing you do, it's not going to show up in the box. Double click in the box. It'll show you. You can even change fonts, right? Like you can get cool on it. You can make it bigger. You can make it smaller. You can make your font a crazy turquoise, which is hard for me to read. Please don't do that. But you can make it black, get that contrast, guys. Play with it. Do a couple of them. Practice. Because price reached resistance and absolutely no trigger lines went through. We're going to wait and see. It's either going to break or it's going to hold. But right now, my rules say no long trades. Guys, I will be back. Nice job. See, you went from ugh to yeah. That's how this class works. Instant results. I will be back in 5 minutes. New users, post some pictures, annotate some charts. Tell me what you see. Old users, if your rules are met, take the trade. If they're not met, take a picture. Tell me why they're not met. I'll be back in 5 minutes, guys, and we will get into that second hour looking at anything and everything that you've done. And we're going to talk about how you can do it better, how you did it amazing, and we're going to get everybody where they want to be, guys, as we head into the weekend. I'll be back in just a second. All right, y'all, let's get into that second hour. Biggie, were you able to write in the box? I see Faith. You pulled it off, user Faith. Got it. Yeah, I love that. Yeah. Celebrate those victories, right? Nice job. Guys, I'm telling you, the more comfortable you are posting pictures, the quicker you're going to get to where you want to be. Can everybody hear me? We good? Guys, this is the part of class. We've gone through the rules. We've talked about advantages. I'm going to scroll to the top here. And I'm going to start looking at your pictures. And we're going to talk about what you see, what you're doing, how you're feeling. We're going to talk about rules met, rules not met, guys. In the very beginning, you're going to want to ask me all the time, hey, Mark, is this a trade? Hey, Mark, should this be a long? Hey, Mark, should this be a short? And what we're going to do is we're going to create this opportunity for you where you don't even have to ask that anymore. You'll be able to post your rules on your chart. You'll be able to understand exactly what you saw, why you saw it, whether it fit your rules, whether it didn't fit your rules. And the first picture that we got here is from Safia. And Safia is using a little different setup. She's using a third chart. She's using a large chart. But I want you to notice something. A termination condition, a pivot stop out from Fibonacci creates a full reversal in the market, right? Safia's large chart has strong triggers. It has a strong bottom. It has no termination conditions. And she takes a little unorthodox entry. But what she's saying is that when every chart says up, when the momentum says up, when everything is pointing to the sky, I have the best chance of success to get to that next key area. And that's exactly what she did, guys. In at 69.45, out at 69.92. Guys, that's almost $500 of profit on that one contract. And then she pulled off another 200 on this one, guys. That's a day. That's a day's worth of profit on one trade, guys. That is like $700 in one trade. This is the goal. Trading with momentum, trading with advantages, trading with a clear path, getting in and taking advantage of being able to read your charts and identify the trades. Great job, Safia. All right, Gary comes in. Gary uses a checklist every time he takes a trade, right? Gary says, I have a strong top, and I have what looks to be momentum starting. I have a mid-band inside of favorable large triggers, and I'm going to jump in and I'm going to take quick profits because momentum isn't there yet. Guys, this is an important look. Those trigger lines are flat. They're not wide in the direction of the trade. They are flat triggers. But as you learn to read your charts, as you begin to gauge these strong tops, these terminations that are creating the reversal, all the momentum, the areas coinciding, you're going to get to a point where your plan changes a little bit. You go outside of that high probability trend trade and you start to kind of dip your toe into that medium probability trade where maybe one small issue exists. Maybe I don't have the best momentum, but because of the clear path in the entry area, I'll take it, I'll manage it assertively. And guys, this is one of those instances where your ability to read charts, that's 14 on the first. There's another contract off, break even, guys. That's a $150 trade in a matter of seconds, trading with the direction, trading with those triggers, trading from an area inside of those triggers. Gary, great trade, nice read. Great management. Being able to look at small chart change. No reason to hope, guys. We don't hope with Nexgen. We gauge advantages. When they're present, we take them. When they're not, you're able to sit on your hands to wait for it to be the best of the best. 10KM came in. He said exactly the same situation like 10:06 a.m. Patterns repeat themselves over and over. Over and over. Let's look at what we have. We have a termination condition that creates a full reversal. The full reversal creates odds favorable momentum. Guys, this is a textbook termination condition. This is an area. This is a divergence high with absolutely no trigger lines through it. We're trading into an area that has the potential to stop the market. If you are 100% rules-based, guys, if your checklist says that termination condition can't exist, then you don't have a trade, no matter what the area inside of favorable large triggers look like. Does that make sense, guys? Give me a Y in the room. If your rules aren't met, it's okay to sit on your hands, right? If your rules aren't met, you're giving away advantages, it's okay to not trade. Guys, the goal is to make money, right? And we scrolled back on that 13-2, didn't we? We did it together. How many times? Well, here we have a crazy strong trending market. How many times did support hold to the tick, right? How many times did support hold to the tick, even with odds favorable momentum? Scrolling back, creating a little bit of trust, guys, and it's up to you to determine whether or not you're willing to break those rules. If you're willing to break those rules, you took the long, but you don't have a clear path and you're losing momentum, right? And you're going to use these clever phrases like but. It's a termination condition, but it looks like really strong triggers. Going to take it now. Same rules in at 94.50, out at 98.50. Medium probability trade has to be managed. But what he did is he made a conscious choice. I know that my rules aren't met, but because of the momentum, I'll take a shot and I'll manage aggressively. And it worked out great, right? Same thing here. It's either rules met or not rules met. Great termination condition creates a full reversal. Full reversal creates odds favorable momentum. Odds favorable momentum creates a clear path. There's a reversal bar and a pullback right to the top of the window of opportunity. And that market begins to head down, right? If 3 divergences print, you may jump out of that trade. You may say, oh my gosh, this is a termination condition. But until that divergence prints, guys, you have the advantage of momentum and a clear path. You have a beautiful entry that's rules-based, and you have an opportunity to get a little bit closer to your daily goal. 10K, both of these are beautiful pictures. Great chart reads. And you saved your bacon on CL due to T-Nate? Terminate. Recently, you saved your bacon on crude? Show us a picture. Guys, if your rules keep you out of a trade, take a picture. Show it in the class. Go, hey, Mark, check it out. Termination condition said I shouldn't be in this trade. I chose not to take it. I'm going to give you a virtual high five and say, man, great job sticking to the plan. Gary, same trade. We saw that one. The trade's so nice, he posts it twice. Guys, John Novak posted this picture. Having both the large triggers at the same spot at the same time makes for the best trend trade look. Do you guys remember what we call this? Favorable large triggers, right? Trend trade 101. When they overlap, when they're one on top of the other and those lines fall inside, it's a tiny little window of opportunity that creates an awesome amount of opportunity. John Novak's just posting that out, guys. That's a great picture to put into your spreadsheet. But you notice that his picture from today's market looks exactly like the picture that we've been using to teach this class for a long time. It's not coincidence. These patterns repeat themselves every day. Your job is to just study them until they become easy. Gary, termination condition, pull back to the mid-band. You had 4 points to resistance, but it's right into a termination condition, right? I'm not sure why you had to put Ninja Trader Crash 3 times already, but I'm sorry for it, even though it's not mine. Guys, it's okay. Doesn't matter. And new users, I want you to kind of embrace this. If you're doing your analysis and you say Rule 2 not met, stop. Just go, yeah, you know what? It's not met. I'm not taking a trade, right? Because if you see this that takes out an awful lot of the probability, right? You go from that 70 to 80% winners with a clear path, and then suddenly you're in that 60 to 70% losers into a termination condition, but that one time you look at it and it goes anyway, that's the market trying to teach you to break your rules. That's that market telling you, hey, you know what? Do it. I could really use your money today. Stick to your plan, guys. Your plan will have been proven to win more than it loses. Safia, this is the picture you had. You wanted to talk about divergences. So Safia, the easy way to say it is you had two divergences, right, on a small chart. What did two divergences mean on a small chart? What do they mean to you? To me, they don't mean a darn thing, right? It means that I had two losses of momentum. That's it. That means that you had divergence from the bottom too. So your small chart came up and lost momentum, right? Bounced off the perfect entry. You did have a second loss of momentum, and it creates one of those pivot stop outs right at an area inside of favorable large triggers. And then Safia, this cyan divergence line, I love this line when I get into a trend trade because what does it mean? It meant that the sellers lost momentum, pushing against the overall trend, pushing against the momentum. And when that market started going up, this confirmed that the buyers told them to go to hell, we're going to the next area. Does that make sense? Divergence against you versus divergence for you. Divergence in the direction, yeah. So the other chart said odds favorable and a clear path, right? That was your 21. Your 13.2 said not the best momentum, but a clear path. And your 5.1 said area inside of favorable large triggers. I already know that the momentum is waning a little bit, but with the clear path, with everything going up, with the perfect spot for entry, I'll take it and manage it, right? So if you took it here and you managed out with a second divergence, that's okay. But if you said everything says up and three divergences are a termination condition, not two, and you held on to it, and it worked out great, and then when this divergence said that the sellers lost momentum, it only made you feel better about the trade that you were in. Does that make sense? Great question. Guys, there's nothing that makes me happier than the force I'm fighting losing momentum, right? If I want everything to go up and I get a divergence from a low, it means that the sellers on the pushback lost momentum. It just makes me feel better about my trade. 10KM, let's see what you did. I love this. 10KM said, you know what? Termination condition. I'm not taking this long, and thank goodness you didn't. Look how it pulls all the way back to those synthetic triggers. Nice job. Joel, let's see what you did, my friend. Joel says, I have odds favorable momentum. You are trading into those one-to-ones that the small triggers hadn't broken through. So, Joel, you are going into a termination condition, right? One divergence, strong triggers, tiny window of opportunity. Joel says, with this much momentum, I'm going to give it a shot. Takes quick profits, second divergence prints, pushes off that mid-band. You take quick profits. You said third divergence ends the party. I'm not going to hope any longer. Joel, I think this is a beautiful trade and great execution, but you are giving away the advantage of a clear path, right? That's all it is. Just trying things out. I like it. Philly, I'm glad you got it. Remember, Philly, click and drag. Get the big chart and the little chart. It's going to help you out. I know you're taking a picture of someone else's, but when you're taking a picture of yours, make sure that that big chart and small chart show up. Guys, great pictures. This is what we do. All day we talk about the rules, we talk about the advantages. You guys post pictures, we talk about it. You guys tell me what you want to talk about, we talk about it. Ultimately, everybody gets to where they want to be because you know what you're doing, right? You're looking for a high probability trend trade. You're looking for a trade that typically wins more than it loses. You're looking for a trade that has very distinct advantages. You're looking for a trade that is back testable, right? It's something that you can go back and you can circle tails and you can look at it over and over and develop trust. Guys, take this checklist. I'm putting it in the room again because I got a little distracted last time. Take this checklist You can grab it and drag it onto your desktop if you want to. You can download it. Do whatever you need to do. Take a picture of my screen, whatever you need to do, but print this thing out, and every time you take a trade, ask yourself these questions. Is the market coming from a good top or bottom? Guys, there's a video. This is your weekend. This is your weekend homework. This video right here is going to take you to the tops and bottoms, trading the edges video. This is going to make you an expert. Maybe not, but it is going to teach you about termination conditions. It is going to teach you about the absolute best of the best. It's going to teach you about knowing when areas are likely to hold, when they're likely to break. If you're brand new, guys, watch this video this weekend. If you are not brand new, watch this video this weekend, because when you come back to one of these videos after you've spent a little time in the market, what happens is you gather a lot more information from it. So is the market coming from a good top or bottom? It's going to help you. It's going to help your win percentage. But you can take a trade without it. You just have to manage it a little tighter. Do you have odds favorable large trigger momentum on both charts? Are the smalls outside of the large on your 13.2? Are the smalls outside of the large on your 5.1? If you check yes, go to the next one. No termination conditions true. No areas likely to stop the market. If you check yes, turn to the smaller chart. Do you have an area inside of favorable large triggers? Guys, I've never had anybody commit to this checklist and do worse than 70% winners. Never. I'm not saying that it can't happen because I can't predict the future, but I've never had it happen. So if you're not winning 60, 70%, maybe it's time to simplify, guys. It doesn't have to be difficult. If you're visual, if you're brand new, guys, here's that same checklist. But I stole pictures from the user guide. Here's a picture of a good bottom, of a strong area, of a termination that creates a full reversal. Here's a picture of strong trigger lines. Here's pictures of termination conditions and how to identify them. Here's a picture of that window of opportunity, guys. Use this checklist. Have it on your computer. Study it before the day. Know what it looks like when you're getting into it. What else can I share with you? I like to share this one because somebody that was much smarter than me once said, if you don't have a plan written down, you don't have a plan, guys. Remind yourself what you're looking for. Never fight direction, guys. Don't fight the triggers. Here's your high probability trend trade. Here's your 50-50 trade with its own management, guys. Take this one, embrace it, keep it simple. Put yourself in a position to win more than you lose. Get that confidence from the memory of success. Keep it focused, keep it simple, allow it to be easy, and take a million pictures, guys. Take a million pictures of your charts. Crude is doing the dance, aren't they? What do you want to discuss, Sophia? Those are reversal bars. The yellow bars are reversal bars. It's a bunch of green lines and bars. So, Sophia, what you're asking me right now is, Mark, can you magically discern what the market's doing based on one chart, based on a small chart, on a range chart? I can't. So we're going to back up a little bit, right? I don't know what those areas are doing because I don't know what's happening on a large chart. So let's keep it simple. Guys, your market flow signal, this is an 8-range chart for those of you that are brand new. You can use an 8-range chart for confirmation. Unfortunately, I don't know what's happening, so I don't know. These green lines, let's go through the key. That's what you call it. So the different things that you're going to see on a chart, on a range chart. Sophia, these yellow bars are nothing more than reversal bars, right? No worries, I got you. It's just a reversal bar. But what this one's discussing is white paint bar arrow signals. What's that? What that means is that when you have a white paint bar going into the area and the next bar is a reversal bar, it's going to print one of these signals, either an up arrow or a down arrow, depending on what's going on, whether it's up or down. But these arrows are only signals if the rules are met for a trade. They don't get you into a trade just because of an arrow. And here is that same look. White bar comes in, reversal bar down, and it creates that signal. So if your rules for a trend trade are met, maybe it's a medium probability trade, and you're saying, I need a little more confirmation to feel good about this trade, well, then you can use this white paint bar into the area, let it generate a signal and get confirmation of that area. It doesn't guarantee a winner. It's just one more level of confirmation as you go through the process. Another thing that you can use for your trend trades are these high volume area lines, guys. So when you have a breakout bar and then you get an up bar after it, it's going to create this green line. This green line is nothing more than a reflection where all of the buyers got together, drew a line in the sand and said, man, if the sellers push back into this line, I'm going to unload on them. If the rules are met for a trade, guys, these HVA lines can help you catch tops and bottoms. But see how close they are to one another? Once again, you have to make sure that your rules are met for a trade. If this high volume area, this consolidation of buyers lines up with the rules for a high probability trend trade, you're using that 8 range chart, and this lines up at that area inside of favorable large triggers as well, it's one more confirmation factor getting you towards the trade where the rules are already met. And you can see it can happen in a trend trade short as well. So understanding that this high volume area is really just, it's an area where the sellers, the buyers kind of drew a line in the sand and said, this is the most likely spot where all of those sellers are going to come back in and try and do it again. You also have the yellow paint bars. These can be market flow signals as well when the rules are met. If you get a reversal bar at the area, ultimately, Safia, all of your definitions are going to be right here in the volume analysis. But I'm going to show you two of the most important pictures. The first one is that your rules have to be true, right? Make sure that your rules are true. So if you're looking for a high volume area trade, guys, make sure that the rules for a high volume area trade are met before you turn your attention to the 8 range chart. If you're looking for confirmation of a trend trade, make sure that the rules for a trend trade are true before you let that 8 range go for the confirmation. So if you're looking for a short, and I'm going to use this as an example. Ways you can use that 8 range chart, guys, is the first thing, if my 13-2 says down with odds favorable, if my 5-1 says that my rules are met, the first thing that this range chart will do is confirm the momentum. And then if you need a little help with confirmation of the area, that's when you look for these signals. New users, you don't need this chart yet. You will add it. There's no doubt in my mind. But keep it simple. Keep it focused. Let it be 2 charts. Get really good at identifying those areas where the market is likely to continue. Get really good at being able to recognize momentum and a clear path. And then what you're going to do ultimately from there is you'll be able to add elements that help you out a little bit. These HVA lines, using these yellows for confirmation, using antenna bars. You're welcome, Safia. And I love this picture. John Novak made this picture a long time ago. It says, do not stare. And then he's like, seriously, do not stare at the market flow chart. Trying to figure it out unless your dynamic Renko bar charts are telling you to take a trade is going to get you in and out of the market a million times when rules aren't met. I know, because when he gave me the market flow chart, I took, I think, 117 trades the first day I had it, because I didn't bother to learn any rules. You're going to take a lot of picks of trades. I love it. Philly, have a great weekend. Enjoy it. And we'll see you on Monday. Yeah, bombard mark with it. Guys, look at this pullback to the area inside of favorable large triggers. John Novak isn't even showing you his 13.2. When he shows you these entries, you can assume that there's odds favorable momentum, that there are no termination conditions, and that John's taken the best of the best entry with a small amount of risk, right? Taking great trades. John, that's a good looking entry, and there's no doubt in my mind that the rules were met on the 13.2. And then Paul, let's see what you did. Paul, you have a 50-50. The triggers are through. Let me zoom it in. My old eyes. The triggers are through, so the path is clear. It's a strong trending market. You have two divergences, and you take the pullback to the lowest area, that pivot stop out right at the midband, the Pineski. Quick profits, your break even, it either goes or it doesn't, right? If that third divergence prints, it could be a deal breaker. Well, it actually already printed. You'll take the exit. But if that strong trending market continues, you're willing to stay in the trade. I like it. If then, right? And you say divergence takes out the previous pivot. Guys, a pivot stop out above you loves to create a pivot stop out below you. It happens a lot. It's a pattern that you see a lot. So much so that we dubbed it the Pineski, right? He sees a strong trending market breaking through areas over 30 bars in the same direction. Paul's plan says keep taking that midband until it stops working. Keep taking a trend trade straight from the midband, not inside of favorable large triggers. As long as the path is clear and the market continues to trend, he'll keep taking this midband until it stops working. And guys, look at how many midbands it bounces off of in a strong trending market. It's not a high probability trend trade. It's an amazing chart read. Jose. Your ticks are off a little bit, aren't they? Smalls above the large, clear path. Little loss of momentum. Those smalls are working their way back. You get in at 54, which is down here at the midband, right? I like it. It looks a little crazy. You got slippage. Lucky you did. That worked out perfect, didn't it? Because it went down to the bottom. You've already had the loss of momentum, and it pushed lower, right? Guys, you see this a lot. If the market is losing momentum, if the market isn't odds favorable, and let me go the other direction real quick. Why do we get in at the top of the window, guys? Do you guys remember that conversation? Why do our entries come from the top of the window? Our entries come from the top of the window because of odds favorable momentum, right? Because that market is moving with such vigor to the upside that we don't expect it to go lower. Does that make sense, Jose? Everybody? We're in at the top because the momentum here says that it's an absolute freight train with nothing in the way. So when you begin to give up momentum, when divergence prints, that momentum is waning, doesn't it make sense that it may push to the bottom of the window? Jose, does that make sense? Odds favorable momentum, triggers outside, everything says go, strong triggers, top of the window. But you're giving up momentum, right? And if you give up momentum, it makes sense that it may push a little lower. And then when this second divergence prints, the triggers change, right? Doesn't it make sense that it may push even lower? I thought you got slipped from the one-to-ones. I love the midband. I got you. You had your entry, but you got in all the way up here. Is it just printing weird? Because yeah, your entry says 54, which is the midband, which is perfect. It just looks weird. You may need to sync your clock, and that might help that out a little bit. It's a great trade. And you took quick profits and that lower divergence. You didn't give anything back. I think you took this trade perfectly, Jose. And that's all. The lesson here is when the momentum isn't blasting, guys, it may push lower, right? And if we look at Paul's chart, The momentum wasn't absolutely blasting. The divergence printed. The market pushes lower. You can begin to refine. And then that third divergence prints, and Paul says, that's it. There's no reason to hope. I have weak triggers and 3 divergences. I made some money on the way up, and I made a little bit on the way down. Paul, great trade. Awesome management. Safia. That is not Safia's. That is Jose's again. Let's take a look. Same trade, right? Everything says up. Weaker triggers, divergence prints, beautiful entry, quick profits. And you just took the quick profits and got out, huh? Didn't even worry about holding a second. You just said, you know what? $200 is a great trade. My goal's only $250 per contract. I'm halfway there. Beautiful. Doesn't have to be a home run, does it? That was $200. Safia, do that 3 times a day, right? $600. Every advantage, easy entries, low risk, $200. Get it to $600. Make $3,000 a week, right? Make $12,000 a month. Make $144,000 a year on a 2-lot. Let's do some zeros. 144,000 is 3 zeros. If you turn it into a 10-lot, right? That's a good looking number. What if you turn it into a 100-lot? That's a good looking number. But it's the same trade, right? It's the same advantages. It's that odds favorable momentum. It's that clear path. It's that perfect entry. And it's not expecting every trade to be a home run. Beautiful trade. Guys, I want you to embrace that. Every trade doesn't have to be a big winner. Every trade doesn't have to be a home run. Here's Paul's trade. 21.25, 4 contracts. That's $200 right there in the bank, right? There's another $100, $300, and then he made like another 50 here. That's like $350. Yeah, you had that big one, right? Man, getting in, reading your charts, making the money, guys. The goal is to get paid. The goal is to get paid, and you can get paid in small increments. Safia, your $200 trade, if you take advantage of Apex allowing you to have 20 accounts, that $200 becomes a $2,000 trade, right? And suddenly your $3,000 week becomes a $30,000 week from the same trade. Fourth, thank you. Thank you, Alex. I'm an English lit major. I struggle sometimes. But it's from the same trade. It's from the great management. It's from those awesome advantages, guys. And I think that this is where we get lost, right? Is I'm going to be a day trader and I'm going to buy a Lamborghini, right? I'm going to get one of these and it's going to be awesome. And I'm going to make $1 million. No, you're going to make $300 a contract for the rest of your life, and you're just going to add more contracts. And one day you're going to wake up and that Lamborghini is going to be in your garage, right? And your garage is going to be attached to a giant house in a beautiful neighborhood. Not because you kept hitting home runs, not because you took chances and risks, but because you had a plan. Because you traded a plan that gave you a statistical advantage. You managed your losses, right? You took the winners and you were consistent. Consistency is key. Mike M., let's see what you did. Everything's red on your charts. I already like it. Everything says down and you went short and you made money. Mike, it's crazy. Every chart says down. You take a pullback, and you finish the move. Nice trade. Paul, yesterday afternoon, odds favorable, 50-50, coming from a great top. Beautiful entry at the bottom of the window. And it got you, right? Arrgh, it stopped you out just above. And you said, wait a minute, this is the right trade. They just kind of messed with me. So you hop back in and you make your money. With the divergence, you said you could have waited for the top of the window, right? What does a slowdown mean? A slowdown means that we're losing momentum, which means that what the large chart's trying to do may not do it that much. And then it gave you, and then Safia, do you see how he gets one of those antenna bars from the top of the window? And he says, you know what, even though I got stopped out, I got confirmation. Scroll back over. There's one of those signals when the rules are met. And it gets it there. But I love what Paul said. Paul said it's a great top and it's a 50-50, but this loss of momentum may push it higher. And it did. And it got you. And then way to stay heads up, way to stay in the game, way to recognize the advantages, and way to wait for confirmation. Paul, great trade. Trade was like trading, oh man. Crude oil was crazy yesterday, Ron. John and I were watching it. And I was like, oh, I think we've got a long coming up. And it went like 8 million. Oh man, that one catered to yours, didn't it? That was your kind of day. Guys, what do we think? Strong bottom creates odds favorable. The market goes up. The perfect entry, lower divergences with weak triggers says that we may push lower. And we did, didn't we? Right to one-to-ones, right to a mid-band. Notice how those large triggers didn't follow along? Gap theory. Guys, when price accelerates and smacks into the mid-band, smacks into one-to-one, smacks into Fibonacci, and those large triggers stay at or above that reversal bar marker, price is likely to close the gap to them, guys. And when it's not coming from a good top or bottom, when it's not coming from a termination condition that creates a full reversal, quite often that market likes to go to the next key area. It doesn't mean that there's a long trade here, but it means I'm not looking for shorts yet. I'm not looking for shorts. I'm waiting for it to close the gap. I'm not trading into one-to-ones with no triggers through it. Guys, I don't even have triggers through this area yet. Not going short yet, but it's a little early for longs. Does that make sense? All we're doing is we're talking about the rules. It looks like odds favorable momentum to the downside, but there's termination conditions everywhere. I'm not coming from a good top. I have a huge gap back to my large triggers. And there it goes, guys. It just closed the gap. Happens all the time. Patterns happen all the time. Paul, let's see what you got. 50-50 with the gap theory. And you said, I'm not taking it. I don't disagree. And it's not only a 50-50 on this fib, guys. Let's talk about it. It's a 50-50 here. It may break, but it hasn't. It may break, but it hasn't. And it may break, but it hasn't. 3 divergences helps the case that this may have just been overrun. Because look at the window of opportunity. And I think for me, did you identify that, Paul? Big old window. No, thank you. What does Paul mean on this one? Gosh, this is such a good read, Paul. Not only is it a large push back to the large triggers, right? That gap theory in effect. But guys, if you're creating a window of opportunity and you draw a box from your highest point of the trigger lines to the lowest point of your trigger lines, your areas inside go from 43.19 all the way up to 43.2275. Guys, that's huge. That's a huge window. That's a lot of risk on a trade. John says, I don't know where it's going to go from. I'll just enter at 2 different spots inside of the window. Do you see how the gap theory pulled them all the way back up to the large triggers? The same gap theory that Paul identified. Don't even need the large chart, right? Recognize that those large triggers are so far away. John Novak says it's likely to close the gap. I'll enter there. But he said because of the three divergences, because of the trend change, I'll put a couple on early too. Split triggers. Guys, that's a great entry picture. Whoops. There's my S&P. And there's the aftermath, right? That gap theory keeps you from getting in early. When the gap is filled, there's a great potential entry. Nice execution. And did you guys notice? I know John Novak noticed 1, 2, 3, 4, 5 divergences in the same location. With these triggers weak, with all of these losses of momentum, he's saying, man, I've got overrun, but my small chart's telling me this market's likely to trend the other way, push the other way. So he waits patiently. Absolutely no divergence. He lets it close the gap. Everything agrees at this point. 50-50 trade with no divergence from the top of the window. Beautiful execution, beautiful chart reading on so many levels. John Novak, you post these pictures all you want. I'll go back and we'll talk about the large chart. Does everybody understand why he did what he did? Loss of momentum on the large chart, right? It's a clear path, but it's not odds favorable. Small chart termination. 5 divergences, trigger change, trend change. And then when he comes to this 50-50, he uses the gap theory when the 50-50 has no divergence and strong triggers to make a decision about entries. Guys, this is a beautiful trade. It looks a little different, right? But chart reading gets you to where you want to be. Chart reading is what sets up everything, guys. Gauging advantages. How are my new people doing? Looks like most of them jumped ship. User Faith, how you feeling? It's like, excuse me, it's like drinking from a fire hose day one, isn't it? Show me a picture, Debbie. Show me a picture. It really is. It's like drinking from a fire hose on day one. And what happens is the repetition, clarity hits. Like on day 2, you're like, oh, this is starting to make sense. By day 5, you're like, oh my gosh, he says the same thing over and over. There's no way I'm not going to get this. It's just going to take me a little bit of time. Jose, I love it when everything that I just said comes into fruition, right? Bad top, multiple divergences, gap theory, so you enter at the top of the window and you get paid on the way down. Beautiful trade, Jose. Great execution. Debbie, you can always reach out to Jason too. See if there's something he can do to help. User Faith, you want to see something kind of funny? Bill's helping? Okay. That Bill, he's a keeper. This is kind of what your path looks like in the beginning, guys. I love sharing this picture. I'm going to share it before I go on my 11 o'clock break here. In the beginning, it looks like fun. It's interesting. You see the potential. You know Fibonacci works. And you're excited. You're like, yes, I'm going to be a day trader. I'm going to be rich. Woohoo! Because that's the goal, right? And then you're like, uh-oh, I got to learn some stuff. And that's totally cool. Nobody ever started a new job that paid 6 figures that knew everything on day 1, right? So you're like, uh-oh, I got to learn some stuff. And I'm not sure what I'm doing, but man, I'm having fun. I'm getting lucky every now and then. Mark keeps telling me what I did right. Mark keeps telling me what I did wrong. I can feel myself getting closer. I'm 30 days in, and there's no doubt in my mind I'm an absolute rock star. And I'm going to go make $1 bajillion, and I'm going to put my kids' college fund into an account. And then you realize that you haven't put the time in, that you haven't posted enough pictures, that you haven't taken enough pictures, that the trust isn't there, that you haven't written a plan, right? and you're like, oh my gosh, I have to start over. Guys, this is a normal path. And everybody in this room, I guarantee it, has been on it, myself included. Guys, when I went live too soon, I lost 5 grand instantly. 22 trades in about maybe a cumulative 2 hours of my life. It was an expensive 2 hours, and I had no idea why I lost it. I had no idea why I wasn't winning. I just thought the market hated me and trading was stupid, and I almost quit. I wasn't teaching this class yet. And I got right here, and this is where John Novak told me. And he goes, hey, Mark, I know we talked about this when you started, right? And we talked about taking pictures. We talked about posting your pictures in the room. We talked about annotating your charts. We talked about making sure that you used a spreadsheet. We talked about learning the rules for when it's okay to trade and using market replay and taking pictures and all of these things. And Mark, you chose not to do it. You kind of got exactly what you set yourself up for. And this is when I made the decision, even though he's my brother, he's probably pretty smart, I'm going to do what he said. Guys, I filled up 3 spreadsheets, 280 lines each. I posted everything that I did in the room, and I got feedback even when it was uncomfortable. Guys, I have probably taken about 12,000 pictures. And every time I take a picture, I get a little bit better. And you start this climb up right here. And you're like, okay, it all makes sense. I'm starting to recognize patterns. And you're like, oh my gosh, did I just pull this off? This is amazing. A lot of you guys are in this phase right now. Look what I can do when I keep it simple. Look what I can do when I follow the rules. Look what I can do when all of these advantages are in place. And then the next thing you know, you keep making money, right? You wake up one day and you're at 70% winners. You wake up one day and you're like, holy crap, I can make logical choices based on trigger looks, based on areas. I can make entry choices. I can take quick profits. I can go zero loss. I can use key areas. I can identify where the market is likely to go. Guys, you notice that this other one is a 50-50 and it had divergence. And it didn't work, did it? From a bad top. Holy smokes. Patterns repeat themselves all the time. So guys, I want you to embrace the path, right? There's no reason to lose money in the learning process. Use the simulator, post in the room. And then once you have kind of put it together and you trust your plan, and I believe that there might be a section in here. Once you trust the plan a little bit, and you understand it, and you know what you're doing, and I don't know where it's at. There is a section on Apex. There's a section on using prop firms to trade their money. Guys, you can control $50,000 for about $35 a month. You don't have to have that big financial risk. You can have up to 20 accounts, which means that you can control like $1 million for $500 or $600. And you can test your plan without that financial burden, right? You can make sure that you can follow your rules under pressure. You can make sure that you understand all the key concepts. When you decide to trade live, guys, don't give up the advantages. Don't stop posting in the room. 50-50 and gap again. Not even 50-50 though, right, Jose? Absolute termination conditions, textbook. And guys, this is why we annotate charts, right? What does 50-50 mean? 50-50 means that the small have broken through and the large have not. Guys, price reached 1-to-1s. Jose, how many trigger lines went through? Absolutely none, right? Price reached support. How many trigger lines went through? Absolutely none. And that's not a good top at all, right? That's just kind of from the middle of nowhere. Probably going to see that fib. But do you see how Rule 2 keeps you out of this trade? But Jose thought he saw the same thing that he saw in the S&P, right? He goes, wait a minute, we just saw this and I made money. But the conditions are different, guys. Those termination conditions work, right? So Jose, go back and chalk this, and Just lost focus, right? But go back and re-annotate it. Go, man, I should have never taken this trade. It was right into termination conditions. And that's 7 ticks. Okay. So you lost $120. You lost 7. So you lost $140 on there, right? And let's go back and look at something. No reason to take it at all. And here you made 100, and you made, so you made 300 here, I'm assuming. And if you make 300 here, but you give back 140 on a bad one, you're up $160. Doesn't $300 feel better following the rules, taking the trades, rather than giving up half of your profits by breaking your rules? And guys, I'm not speaking to Jose directly. I'm speaking to all of you. Sometimes the difference between a great day and a not so great day isn't the great winners that you take. It's those broken rules where you choose not to take them. Biggie Paul posting in the class. I like it. Let's see what you got, bud. You took this trade at the short, the dots, the 1-to-1, and you got out here. So, Biggie Paul, are you telling me that you took the exact same trade the exact same way as one of our seasoned people in here? What got you in? The one thing that I want to see from you, show me that big chart, man. Show me the reasons that you got in. It's a beautiful trade. You absolutely crushed it. Absolutely crushed it. But did you take it because of the odds favorable momentum, right? Did you take it because you hadn't reached an area yet? And did you take it because those dots lined up inside of favorable large triggers? And that's what I want to see from you every time, man. Annotate that chart and let me know why you're doing what you're doing so that we can repeat it, so that you can do it over and over and find that success. Biggie Paul, welcome to Nexgen. All you got to do is study a little bit and you're going to get exactly where you want to be. And I'm going to be that annoying voice in your ear every time, helping you stay out of trouble. Guys, price reached a divergence high and absolutely none of the trigger lines broke through. What do we call this? What do you think? Look at how precise that is. That's a termination condition, guys. You know what, Biggie Paul, the only thing I think you could have done better there, honestly, is showed me the large chart. Tell me why, right? Don't tell me that you took the trade. Tell me why you took the trade. Does that make sense? Tell me about the momentum and tell me about the clear path and tell me about the entry inside of favorable large triggers. And not for me, because I know how to do this. I can read these charts. But what you're doing is you're reinforcing. And the cool thing where you said get out here, why'd you get out here? I got out here because it was support on every chart. I got in high and I got out low, and I don't know if you know this, but I'm kind of a big deal because I followed rules and I got paid. Does that make sense? So really reinforce those rules every time you take a trade, and man, it's going to make those trades repeatable every day because you're going to start associating that success with those advantages. I forgot what I was talking about. I think we were looking at the market, weren't we? Price reaches an area, that divergence high, absolutely no trigger lines. Who tried to go long at a mid-band that wasn't inside of favorable large triggers, convincing themselves that it was the right trade, even though the rules weren't met, guys? You guys want to see how easy this is? User faith, Biggie Paul. Are we in an uptrend or a downtrend right now, based on that large chart? Show you guys how easy it can be. What do you guys think? Up or down? The cool thing is watch this. I could do this and take all those indicators off there. And absolutely, you're in a down trade, right? Or a downtrend. which means that I'm only looking for rules to be met for high probability trend trade short. And guys, if the first rule says that I have to have strong triggers, I want you to see just how easy this process can be. If I have to have strong triggers in a downtrend, this is what my triggers look like, right? The smalls are below the large, they're red. The large are wide, they're red. They're angled in the direction of the trend. Do we have odds favorable momentum? What do you guys think? Is rule number 1 met? Aha. So Biggie Paul, you say yes, and this is why the classroom works. Because in order to have odds favorable momentum down, you're absolutely right. The small triggers are below the large, but let's go back to the manual one time. Do you see how the large triggers need to be red and angled down and wide in the direction of the trend? The small need to be red and wide and angled in the direction of the trend. So what we've got right now is we have trigger lines on the side of the large that paint it red, but they're not angled down yet. They're still going up. So I've got indecision. I've got large triggers up and small triggers up, but I have direction down. Man, I don't know if it's going to go up or down. So I can sit on my hands and not hope that this little mid-band holds, right? I can sit on my hands and not go long into a termination condition that just held. And it's going to take you a little repetition and a few days to really get comfortable. But the more vocal you are in class, the quicker these lessons are going to solidify, because I'm going to stop everything that I'm doing and I'm going to tell you where to find your answer, and I'm going to show it to you visually. And you're going to be able to take these answers and recognize a lot of the times it looks like what after the fact? The trigger lines look like that after the fact? That's fair. But Biggie Paul, are you trading after the fact or are you trading in the moment? Don't you want to be trading with odds favorable? I don't care what happens 5 minutes from now. What I want is odds favorable right now. I want a clear path right now, and I want an area inside of favorable large triggers right now. Because the reality is, man, that market is going to change all day long. That market's going to go up. That market's going to go down. You're going to have a clear path. You're going to have weak triggers, right? You're going to have all these different things going on. But if you're just patient enough to wait for those advantages, right, then you're good. Then you've got those 3 things, right? You've got that recipe. You've got that momentum. You've got that clear path. You've got that entry area. And if all you do is wait for this, man, you're looking at a trade that typically wins 70 to 80% of the time. And Debbie, I looked at it. You might have went and got a drink of water. And I said, absolutely. What a beautiful trade. Right? It's not a great top, but you did have odds favorable momentum. You did have a clear path. Because of the gap back to the large triggers, you took the high entry point, just like Biggie. You and Biggie went full rock star together. And then you exited where the market was likely to stop, down here at the divergence low, close to Fibonacci support. Perfect on all accounts. I don't think this trade could have been done better. But the point that I was showing too is that's 3 points on your first contract. That's $150, right? That feels good on its own. That's 9 points on your second. What is that, 450-ish? Give or take, guys. I'm being broad stroking of a brush here. Debbie, you made $600 in 3 minutes, 2.5 minutes, right? $600 in 2.5 minutes with the advantage of momentum, with the advantage of a clear path, and by taking an entry inside of favorable large triggers. Can it be this easy every day? Can it be this simple? Can you wait for those advantages? And Biggie Paul, that's one of the things that I'm trying to say, is that when it's not perfect, when it's not your best look, dude, it's cool. Sit on your hands and just wait. Now we have a termination condition that's creating a full reversal, right? Now those large triggers are starting to point down. Now those small triggers are starting to point down, but I got a big ugly fib right here at 48. I need to make sure that my path is clear. Starting to get that trigger look. I've got that trend. I need a clear path before I ever look for an entry at an area inside of favorable large triggers. Guys, I'm going to go take a big drink of water. I'm going to stand up and stretch my legs. I'm going to breathe deep, and I'm going to divert my attention away from my monitors for a second. It's okay to do that, guys. Go stretch your legs for a second. Clear your head. If your rules aren't met, it's a great time to walk a lap, because what it's doing is it's keeping you from trying to fabricate. And you say to yourself, man, my rules aren't met. There's nothing to do. Let's walk around. Let's think about something else for just a second. I'll be back in 5, guys, and then we're going to finish strong. If you have questions, I want you to post them in the room. I want this last hour to belong to you guys. Back in a minute. All right, guys, I'm back. Let's talk about this large chart. There's a million lessons in one picture here, guys. And I'm going to use the call out. I'm going to show you how you can, just from one picture, identify so many different things that are going to show up. This is a bad top. Why is it a bad top? Because it's not a termination condition. You guys understand that concept? This is just a pivot that has divergence, which means that there was a loss of momentum, but price didn't reach the area. Therefore, it's not a termination condition. From that bad top, price came all the way back to the mid-band, all the way back to these one-to-ones, missed them by a tick. And then the large triggers remained a full bar away. So now we have a bad top and we have the gap theory in play. No shorts until it closes and rules are met. But since it's straight into a termination condition, guys, there's no shorts because you don't trade into an area that the trigger lines haven't broken into. Price comes all the way up to a divergence high, exceeds it by about 2 ticks. None of the triggers come anywhere close, guys. Now we have a termination condition, right? We have a bad top, pulls all the way down, comes back up, becomes a termination condition. The termination condition creates a full reversal. The full reversal provides odds favorable momentum. And now we're 50-50 on an area. And let's go back and see what happens. Now that we're coming from a termination that creates a full reversal, just waiting to see what happens. But guys, there's so much information in one picture here. You didn't have to take a trade to be able to start chart reading. And I don't know why that's even up. They stopped printing, Jose. Right? So this is one of those ones. They stopped printing 2 bars ago. And the market's already tested them once. I'm going to be aware of them, but I'm still looking up here. I'm still a 50-50. My small triggers don't have a huge gap between the large, right? So I'm still waiting to see what it's going to look like overall if there's a potential opportunity. That is the S&P. Sorry. Accidentally left a separate S&P up. We're looking for crude oil, right? So what are we looking at down here? Now we're looking at a termination that creates a full reversal. Now the smalls are working their way outside. If we had to identify a window of opportunity in the event of a pullback, that's about all we have right there, right? Those one-to-ones are done printing. So when the one-to-ones finish printing, just like divergence, when the conditions have been met to kind of nullify it, they're going to stop printing. I always see them, but I don't worry about them really anymore. I'm just looking for rules to be met. Strong top, right? Termination creates a full reversal. Full reversal has me coming into that odds favorable momentum. That space is created between the small and the large. I have the same strong triggers on the 5-1. I got a reversal bar, but it never made it to an area inside of favorable large triggers, right? So I'm not jumping in, I'm not chasing. I'm waiting for my rules to be met. If this reversal bar prints, I can identify my lowest point of resistance to my highest point of resistance inside of favorable large triggers. How do you feel about it, guys? My large trigger hasn't made it through the area completely yet. It's still above that line, half or through, but I don't have the advantage of a clear path yet. Not yet. We're getting close, but not quite. Is that how you read it, Jose? And guys, the thing is we're not guaranteed a reversal bar. We're not guaranteed a pullback. We're not in control of the market. The only thing that you will ever be in control of is whether or not your rules are met, right? Whether or not your chart reading provides you the advantages that you need to take a trade. Your trade isn't my trade isn't Mike's trade isn't Jose's trade, and Jose's trade may not be Debbie's trade, right? It's personal. Being a day trader is personal. It has to be your plan. It has to be your looks. It has to be your rules for entry, right? It has to be your rules for management. My job is to help you learn a basic set of rules that provides advantages. My job is to look at your pictures and help you learn how to manage those trades that you're taking. But your job is to make it yours. And guys, remember that we don't have to be first. We don't have to be the first ones in. We don't have to be the last ones out. We don't create the trend. We don't establish the momentum, guys. Big money investors do that. We wait for them to create advantages and then we jump. We take our shot. Mike, is the mid-band 50-50 on the 13-2? Great question. So let's talk about when the mid-band is considered a termination condition, right? And the termination conditions are what define the 50-50. Does that make sense? Let's start there. It's 50% through a potential termination condition, 50% not. So your large chart mid-band is a termination condition spot if the large triggers are a full bar away. And I'm going to show you pictures of that. I'm going to go to my termination condition. I've got a million pictures, guys. Your large chart mid-band can be considered a termination condition. Let's find one that uses the mid-band. There we go. If those large triggers remain a full bar away, if that gap theory is in effect, if we're expecting the market to bounce to close that gap to the large triggers, then this mid-band is very much considered a Fibonacci area, right? It's considered one of those areas that may reverse the market. Does that make sense, Mike? So that's the beginning of answering the question. And then when you look at the market, all you have to do is ask yourself, where are the large triggers? They're on top of that mid-band. So the mid-band isn't my worry right now. I have large triggers that haven't broken the area yet. This is a termination that creates a full reversal, but it is not coming from Fibonacci. So I'm just kind of looking. I'm waiting to see if the rules are met. I'm waiting to see if there's divergence on this 50-50. I've got strong triggers, right? And I've got momentum and a termination caused it. What are your rules for a 50-50? If divergence prints, will you take it? If divergence prints, will you take it and manage more aggressively? Because now we have divergence, right? You still have the same window of opportunity, guys. This is where the market is likely to continue. Should you decide to take the trade, that's the point where the market is beyond that window, beyond those large triggers. 51, you're looking at about 6 ticks, give or take. But you do have divergence, and you have divergence on a 50-50, and you have a termination, but it's not coming from a Fibonacci area. So it becomes a medium probability trade. And if you choose to take this trade, guys, it's not going to be the same likely outcome, 70-80%, right? You have this small issue. You have trigger lines that haven't made it through that area yet. You do have a loss of momentum on the 5-1. This isn't a trade where you jump in and you say, you know what, I'm going to put 18 ticks on it and hope for the best. This is a trade that says, man, I've identified where the market shouldn't go if this trade's going to work. I'm going to keep my stop in place. I'm willing to take a small loss because of the advantages that are present. I'm willing to manage assertively. If I take this trade, I've identified my first trouble spot. I may take a portion off here and get to zero risk. Some of you say if I'm in at 46, If this market goes to 36, I'll take $100 and get to zero loss because it is a medium probability trade. Does that make sense, guys? I'm not saying whether or not there's a trade there. What I'm saying is that you have to identify whether or not your rules tell you that this is your trade. It's a termination that creates a full reversal, right? Full reversal provides odds favorable. If you got in at the top of that window because of divergence, guys, you probably already got paid and you're at zero loss. What if I get a second divergence on a 50-50 trade? What does that do to the plan? Does that make sense? But do you see how it came back right to the window from a termination with odds favorable? What was the fly in the ointment? Those large triggers haven't quite broken, and divergence in print, which means that it's medium probability, which means that it has to be managed aggressively. And now you have two divergences on an area with a potential to break. What does that do for your management plan? What do your rules say about it? What did you write down on a piece of paper? And if your rules say, I will exit with a second higher divergence, well, then you're out of that trade and it doesn't matter what happens next. And if it drops 1,000 points, you have to be okay with it. And guys, you'll get to this point where everything is pragmatic. Everything is based on if-then. Your emotions kind of go to the other room. They're watching TV while you trade, right? Your fear doesn't come to the room with you. And I'm going to share this example trading plan. Guys, this is that path. We talked about the path earlier. This is kind of another one. It's the same thing. It's reinforcing what I say at the beginning of class, guys. To minimize your learning curve, post your pictures of your trades in class, every trade. Win, lose, or draw. Don't show me a $1,000 winner, but your P&L is negative 800, guys. Show me what got you to that negative so that we can fix it, right? If you win and the rules are wrong, you may have a short-term victory, but a long-term failure. How will you know the difference? To be sure, you need feedback, guys, and I'm here to help. If you place a trade on the simulator, participate in class, there's no risk. No loss of capital. You need someone to tell you what you did right or wrong when you're new, guys. That's part of the magic. David, you said, but there is divergence on top and bottom. What chart, David? Divergence on the top here, divergence on the bottom here. Okay. Do you have divergence from the top on a short trade? Does it work its way into your rules anywhere? Do you have that written down? Guys, the only rules that I have on the 5-1 are areas inside of favorable large triggers, and 3 divergences may terminate the trend. That's it. But look at this. Now I have 3 divergences from the top. How cool is this? Which one wins? 3 from the top or 3 from the bottom, guys? How's that for a potential tiebreaker? Odds favorable momentum to the downside. Now it's a clear path from the downside. What are we seeing? Isn't this a pain in the ass? Pardon my French. There's your one bar. Look at all the bars that happen in this one bar, guys. 3 divergences go in both directions. Small triggers inside, but they're down. What does your large chart say, Safia? Guys, what direction is the market moving? Give me a U or a D, right? It's going down. Is it coming from a termination condition that created the full reversal? Yes. Does it have odds favorable momentum? It does, doesn't it? 13.2 says go. Guys, what do 3 divergences tell you from the bottom? What do 3 divergences from the bottom tell you? That the trend may end, right? That the market may terminate? That it may push the other direction? So why worry about tiebreakers? You don't have anything in your rules that talks about these, right? It just means that when it pushed back, it lost momentum. When it pushed back, it lost momentum. Who cares if the up is losing momentum? We're worried about the down losing momentum, right? We're worried about visually seeing that the sellers can't maintain the momentum because we're trading short, because we're looking for shorts, because we're trading with that short momentum. Guys, don't get wrapped up in creating rules. 3 divergences from a low, especially with weak triggers, may terminate the trend. That's all I need to know to exit a trade. Does that make sense? But do you see how easy it is to start adding things? I really want to be in the trade. I really have odds favorable momentum. It really did come from a termination condition, so much so that I'm willing to ignore 3 divergences with weak triggers. I love that this just happened, right? Don't add rules, right? Embrace the ones that keep you safe. Embrace the simplicity. Because if you got in on the first one, you probably did all right. And then this chart said it may go up higher. You gave away the advantage of a clear path. You have to be consistent with your rules no matter what happens next, right? No matter what happens next, you have to be consistent with your rules. And guys, that was like 4, right? But what you saw here, the market knew that it was at a key place, didn't? Look how the 5-1 dances. Let the 13-2 lead the way. Use the 5-1 for entry and then have the if then. If 3 divergences print in the same location, well then I'll manage out of the trade, right? Does that make sense to everybody? Trade the rules until the rules aren't true and then don't trade. And it's a pain in the butt sometimes, guys. Because when it goes down here, you're going to be like, oh, I knew it was going to go there. No, you didn't. You had absolutely no idea. You had formed the opinion that it would go there. Some of you formed the opinion that this market would go up because of these triggers, right? Some of you formed the opinion that this blue line would break because of that momentum. Some of you formed the opinion that this red line would break because of that momentum. Guys, opinions get expensive. They really do. User faith, I love it. Day 1. So what got you in down here? What made you want to go short? Where did you get in? The yellow dotted line made you get in. Okay. Did you have momentum? And this is how we're going to go through this every time you post a picture. And one thing, user faith, that I don't have from you, I have your large chart, right? But I don't have your entry chart. So if we're reading the large chart, let's annotate it. Let's take a second and reinforce what we see. Top seems good, right? Termination creates a full reversal. That's the precursor. That's the one. That's the one that makes us happy. What else do we see? We see odds favorable momentum. That's the second thing that makes me happy, right? And then I also see a clear path. My smalls are below the large are below, well, not quite. So we'll just call it not hitting a fib. So when this chart looks like this, user faith, that's when we have to go to this chart to figure out how to get into the market, right? And your entry was at 71.31. So at 71.31, you got in somewhere over here. I'm not sure where. So this is where you and I would have the conversation where we'd say, man, That large chart looked pretty good. That large chart had odds favorable. It had that clear path. But what happens over here is three divergences in the same area may terminate the trend. May. It's never guaranteed. And if you're a brand new user, you're probably saying, well, I'm going to manage out of this one. If you've been with Nexgen for a while, you're saying, but Mark, with this termination condition, with this much momentum, and then the path ultimately cleared and my smalls turned in direction of the trade, I'm willing to take this trade. And then I'll manage it assertively if need be. There are no wrong answers, guys. There's only chart reading. So user faith, great job. You're trading with direction. You're trading with momentum. You're trading with a termination condition. My only goal for you is to make sure that we can refine your entries to the point to where you can minimize risk and maximize your profit potential. Does that make sense? And this is what we're going to do every day. I'm going to praise you guys. I'm a big fan of celebrating victories. Anytime you do something right, I get stoked on it. I want to point it out. And your large chart read was beautiful. And now we're just going to figure out how to get the most out of it using that small little refinement chart to get you in at the best of the best area. Great job, and thank you for sharing. It's a little nerve-wracking to share sometimes, isn't it? Whoops, what did I do? I tend to be pretty warm and fuzzy, though, and I really do enjoy teaching. And the more you guys give me to talk about, the more I get just really bought into your success. And you guys that post all the time, and I start seeing you getting successful, and I see you following these rules, and I see you making the money that you told me that you wanted to make. I really do. I'm like a proud dad in here. So keep posting them. Give me that opportunity. Guys, this is your S&P. The market came flying down, didn't it? You were at the tail end of momentum. The smalls were outside of the large. You had a window of opportunity. Some of you may have caught this short. And I don't think it's coincidence that it came from a termination condition that created a full reversal. What do you guys think? Were we too busy having fun in crude oil? Anybody take this one? Two divergences aren't a deal breaker, right? And it pulled right back to that area that all the trigger lines were below. I like that look. But you got to study these looks over and over until you get good at them. So going back to this one, guys. Post your pictures, win, lose, or draw. Let's talk about them. Sometimes I'm going to hurt your feelings. I'll apologize in advance. I'm sorry if I ever hurt your feelings, but I'm also going to encourage you to tape up and play hurt, because if you're not making mistakes, you're not learning. And one of the things that you have to do is you have to be able to accept that on day one, you're not a professional day trader and there's things to learn. So put yourself in that student. Use this outline for education, guys. It's been consistent for 2 decades. Learn the rules, simulate the trades, simplify. Take advantage of market replay, guys. As you go into the weekend, you can market replay the entire week. You can turn your 1 week's of experience into 2 weeks of experience by replaying every day. Fix your mistakes, pause it, use your checklist, make sure that you're doing what you need to do, and repeat that process till you get to where you want to be. Make sure that you're using that checklist, guys. Make sure that the rules are met each and every time you enter the trade. Don't practice the wrong trades. And make sure that you're annotating. This is so key. I usually say it till I'm blue in the face. Guys, if you're not telling me why you're doing what you're doing, how could I ever hold you accountable for following your rules, right? So give me this information. Let me know why you entered the trade. Talk about the advantages. And if there were disadvantages, man, point them out. It may end up helping you in the future. Every time your rules are met, I expect you to take a picture. Put it into your spreadsheet. Make sure that you go back and study it. Make sure that you're creating. Is it? Man, I've got a lawn crew outside of my window. That may be part of it. Is anyone else? Can everyone else hear me okay? I guess not if nobody's answering. Nope, okay. Whew. I was like, oh no. Sounds funny. Funny, haha. There was a guy with a weed eater right outside. Yeah, there is background noise, guys. I apologize for that. Friday is lawn day here, and my office is right in front of the front yard. Guys, every time your rules are met, get the picture. Go back and study it. Make sure that you're good. Your first 30 days with Nexgen, guys, I can't stress this enough. Your first 30 days should be about entries. Your first 30 days should be getting in at the best of the best area so that you can reduce risk, so that you can maximize profit potential. A couple of you that are brand new have already showed me that you are great at recognizing momentum, right? You're tops at recognizing the trend. You're starting to understand those termination conditions. Guys, in your first couple days, it's easy to be 90% of the way there. Focus on your entries. Make them great, because great entries create manageable trades. You're going to have to define your management plan. Initially, a mechanical approach that eliminates emotion or opinion, guys, tends to be the most straightforward approach. You can alter your plan when you're done with the education. Let me show you how easy this can be. If you enter the trade in the correct spot, guys, your initial stop is outside of the window of opportunity. Plain and simple, where the market shouldn't go. When you enter the market, your stop's in place, one of two things are going to happen. You're either going to be stopped out of this trade because the market went beyond. It's part of that 70% or that 30%, that 20%, right? It's a cost of doing business. Losing trades are part of a positive equity curve. The other scenario is that you get a reversal bar in the direction of your trend. And if you get a reversal bar in the direction of your trade, guys, suddenly that big stop loss turns into a small stop loss. You've reduced your risk. And from this point, there's absolutely nothing for you to do. Either you get stopped out for a small loss, you live to fight again, or your first profit target is hit. Guys, if your first profit target is $100, quick wins, dopamine kick, oh my gosh, they can't take that from me. Hit that first target, move your stop to break even, guys. You've got money in the bank. You're getting confidence through the memory of success, and now you have absolutely nothing to lose. Either that second contract target gets hit, or you're out of this trade break even. Guys, and I'm telling you, $100 and break even, if your whole day is a bunch of cruddy little $100 trades and you do it 4 times, that's a pretty good day. That's a pretty good week. Debbie, have an amazing weekend. Thank you for being here and sharing pictures. I appreciate it. Nothing to do, guys. Either get stop break even or it hits your second target. And if it hits your second target, you're out of that trade with the advantage of momentum, no termination conditions, and you're out of that trade with the advantage of having entered at the best of the best spot. $300. This whole trade took 2 minutes, minute and a half to finish. And you're just going to study each and every day, guys. So I'm going to give you that little PDF file. Review it over the weekend. Commit to simplicity, right? Commit to allowing it being easy. Commit to just being on the right side of things. It's amazing how easy it can be. Jose trades. Yeah, he does. Jose, 2 for 2 on terminations, right? No divergence, 1 tick off. I like your entry at the area. You did have odds favorable momentum. Jose, for me, and this is just me, guys, I won't ever tell you what to do. Your Fibonacci areas come to be through thousands of calculations, thousands of measurements, thousands of retracements, of expansions, of alternates. And your software is going to take every one of those pivots, every one of those moves, every one of those measurements, and it's going to start determining which lines are the most important, which prices have the highest concentration of the most important fib levels. And when it's done with all of those calculations, thousands of calculations, we end up with fibs. And guys, fibs are amazing. They really are. But this Fibonacci area, this area of support, is thousands of calculations, which means that if I'm a tick above or a tick below, guys, I'm gonna consider that the area hit. Me personally, I'm gonna consider it area hit because I know how they're formed, and they're formed from thousands of calculations and concentrations, and that's the most priciest price, right? But a tick above, a tick below, Fibonacci is an area. Divergence highs are precise numbers. Precise numbers. It is one price where that market failed to go up and lost momentum, right? One-to-ones, print in the moment. They are precise numbers. They are 100% alternates, not 101, not 98, 100%. Very precise. Fibonacci is an area, guys. A tick, for me, is as good as gold, especially if it's a tick and the small triggers are inside of the large. I'm seeing that slowdown. Does that make sense? Guys, the fibs are great, and they stop the market on the tick more often than they don't, I think. But one tick off, I'm okay with it. I'm going to consider it hit. There's just no reason. There's too many opportunities. And guys, on that same token, sometimes they overrun a little bit, right? The trigger lines go through, the smalls try to get through, the large try to get through, and there's a little bit of overrun. And you'll see those weak triggers, and you'll often see those divergences, and you'll see that full change. Sometimes areas overrun. The key is waiting for those rules to be met, right? Let me make this a little bigger. What is that black and white line? The black line here. Oh, the black and red line. These are your synthetic triggers. So I'll show you on a chart. Your 13.2 large triggers, the black and red line here. See how they're stepped over here? These are your synthetic triggers, which are really nothing more than your 13.2 large triggers. So you know that if you have odds favorable momentum, these large triggers have to be wide and angled down. You can see that on your 5-1 chart. The smoother black and red triggers are the large triggers on the small chart. They're native to the small chart. And it's when they overlap like this that you get those favorable large triggers. So the ones that aren't stepped are the native 5-1. The ones that are stepped are going to be the large triggers from the 13.2. And these two work together to create what we call favorable large triggers. When they trend one on top of the other, it gives you that very precise area, a very consolidated window of opportunity. It's just one more little confidence factor there. Because to have odds favorable momentum on my large chart, my synthetics have to be strong, or my large triggers have to be strong in the direction of the trend. And it gives me an advantage. And if you go back and you look when there's areas of consolidation, and I'm going to see if I don't think we've had one today. The market's been moving insane, which is a lot of fun for us. That's how we make our money. But when they're flat here, they're going to be flat on your 5-1, and it's a great visual. When they're flat here, they're flat on your 5-1, and it helps you identify when you don't have that odds favorable momentum so much. Gary, 50-50, divergence prints. Yep, you had a full bar back to the area. Great annotation, right? He's like, I've got a 50-50 trade. There is no divergence. Oh my gosh, there was a full gap back to those large triggers. Would have kept you out from here. You still might have taken a trade here at the bottom, but it would have been a much lower risk scenario. Or you may have said, I'll wait for the areas over here. I'll wait for a little confirmation. I think it's a great read, good annotation. Yeah, we all do that, don't we? We decide what's going to happen, And even if the conditions change, sometimes we forget to change with them. I think that's that whole human thing. It's a pain in the butt, isn't it? Being human. It's inconvenient. Guys, price reaches the midband. Here's that gap theory again. It's a pattern that repeats itself. It doesn't mean go short, right? What does the gap theory mean? It simply means that price may pull back and close the gap to those large triggers, which means that I'm not looking for anything here, because if it's likely to close that gap, well, then I'm probably going to get run over if I try to go long here, if I try to go long here. It's not guaranteed that I'll get run over, guys. We don't control the market. But it means that this is a pattern that's repeated itself so many times that it's worked its way into the literature, that it's worked its way into the lessons, that it's shown up in my checklist or my spreadsheet, right? Gap theory, gap theory, gap theory, gap theory. This is a pattern that happens so much, I keep taking pictures of it. Good stuff today, guys. How'd we do? Anybody learn anything? If you got nothing out of this class other than I need to just study a little bit, then that's a win, right? But every day, user faith, I promise you. No, Biggie Paul, I'm here Monday through Friday from 9 a.m. to noon. Monday through Friday, reinforcing these great lessons, looking at your charts, giving you feedback. Trade during the week. So what most of our people will do is they'll take a trade. They'll listen to me, right? If you need help on the rules, the first hour is all rules, guys. The first hour is all rules, getting them. And then trade away. And then post every picture that you have. And the cool thing is it doesn't even have to be a trade. You could show me a picture of this and we'll talk about it. You can show me a picture of this and we'll talk about it. I appreciate that very much. Guys, I love what I do. And there's no doubt in my mind, if you embrace the simplicity, embrace the path, right? Don't feel the need to add things that don't need to be there. Don't feel the need to create more challenges, more things to read, more things to go through. Take a metric shitload of pictures, pardon my French. Post every one of them in the class and accept the feedback, guys. Your goals are my goals. We're going to get you where you want to be. You want to be a millionaire? I like it. Good. So, Biggie Paul, do you know who Ronnie Coleman is? 8-time Mr. Olympia. Have you ever heard of him? Huge bodybuilder. So Ronnie Coleman, are you familiar with this phrase? Everybody wants to be a bodybuilder. Don't nobody want to lift them damn heavy weights, right? Guys, everybody wants to be a millionaire. Nobody wants to post pictures in the class. Everybody wants to be a millionaire. Nobody wants to learn the rules. Nobody wants to write a plan. But I tell you, the people that put the work in, those are the people getting where they want to be. Joel, I will give you my spreadsheet. Guys, my goal for you isn't always that you steal my spreadsheet, right? I want you building yours. But I'll give you a great start. There you go, Joel. Laird Hamilton, best big wave surfer in the world. Used to say everybody wants to be a big wave surfer. Nobody wants to paddle out in that nonsense, right? Your charts disappear and you have to log in again. So what's happening there? NinjaTrader 8, every now and then there's a challenge that comes through. Gary, gap theory, sitting on your hands. I love it. User faith. So every time you use NinjaTrader 8, it creates a little bit of draw on your computer depending on what you have going on. This is a checklist that was designed by John Novak to help your computer run optimally. So go through, yeah, no worries, steal them. Go through deleting cache and ticks, stuff like that. NinjaTrader 8 does have its challenges, guys. It's not rooted in the Nexgen software. The Nexgen software is the exact same code for 8 that it is 7. 8's a platform that creates a little bit of challenges when things start to run extensively. John Novak is working with a couple different programmers right now using a fib accumulator to keep that problem from happening. And I do apologize from the absolute bottom of my heart if there's challenges there. User faith, when you go through, if you have that problem, there's a little thing you can do. Go to NinjaTrader 8. You're going to go to your data and you're going to delete. Yeah, guys, remember that NinjaTrader is not Nexgen. It's so important that you understand that. You're going to go to NinjaTrader 8 and you're going to go to your database and you're going to get rid of the cache and the tick. Takes 2 seconds, right? But if it does, Biggie Paul, I've had mine crash mid-trade, but you know what? My stops are in place and they're electronic. And if I'm taking the right trades, I'm cool. I don't have to look at that trade. I can walk off to the kitchen and go pour a cup of coffee. After I get rid of that, I'm going to go to my temp folder and I'm going to delete whatever's inside of it. After I do that, I'm going to go to my workspaces and I'm going to lose that recovery folder. And these are all things that help it run a little more stable. And that's what you can do. I will also make sure that my computer is running optimally. Yeah, and you can flatten an Apex. Absolutely. Guys, if you're using that Apex account and you're on NinjaTrader 8, man, there's a link that says flatten accounts. Right there. Always have this open, right? And then, Paul, you said that you get rid of the tick replay. Guys, synthetics, it helps, stuff like that. Your easy desktop is working great. And guys, John P's nailed it. Make sure your computer can handle it as well. I don't care for the challenges, but challenges are always going to present themselves, guys. That's life. Use that checklist. Make sure that you're giving yourself the best chance of success. I posted the link in the room. Guys, I don't know if you know this. John Novak is creating his own platform, right? It's going to be available soon. John Novak is in this constant state of trying to make your life better. Wow, John P., that's crazy. 128 gigabytes. And probably an amazing video card. My video card is like an anchor. It's not great. And that's where my challenges come in. Yeah, you got the supercomputer. I love it. And it's going to make it run a lot smoother. So, guys, I apologize for challenges. I really do. But the challenges aren't Nexgen. The challenges are NinjaTrader. What Nexgen is doing is working diligently to help you work around those challenges. And there are ways, and don't be afraid to go to the trader chat. Don't be afraid to ask questions. Don't be afraid to reach out to Jason to see if there's something that you've missed to make it run more efficiently. Monday through Friday, guys, 9 a.m. to noon Eastern. I'm in here. We're talking about it. We're looking for it. Absolutely, you will, Biggie Paul. If you had any idea the money, his personal money that it took to create it, you'll understand why he's charging for it. But if you've ever met John Novak, no stone unturned. And I think it's going to be a lease. So it won't be anything much. And guys, if you're making $250 a contract a day, you should never want again. You should never look at a price tag again. You'll just start banging up contracts. Guys, that's it for me. I've enjoyed the class. Biggie, user, I can't wait to see you guys grow. Can you use the system on your laptop? Absolutely. So user faith, what I'm doing right now is I run a gaming laptop and then I have two 32-inch monitors attached to it. And that's my trade setup. Thanks, Mike. I'm running off of a gaming laptop. I've got two 32-inch monitors. You guys just met me. Guys, I'm traveling the country with my wife right now. She does like director positions and manager positions in hospitals, interim. I'm traveling the country. I'm teaching this class and tattooing the world. So we're all over the place. I teach this class from hotels. I teach it from Airbnbs. I teach it from the houses that we're staying in. Guys, you can be full mobile and do what we do any place in the world as long as you have a computer and an internet. It's amazing. You don't even have to be wearing pants to do it, guys. All you got to do is learn the looks, study them, embrace them. and you can get where you want to be. Guys, I will be back Monday morning. We're going to do this again. If you study over the weekend and you have questions, take pictures. My email always works, but I don't open up my laptop a lot on the weekends. If I do see an email from you, I'll always respond. But it may take a day or two. Don't panic. It doesn't mean that it doesn't mean that I'm ignoring you. Guys, my Skype works as well. I certainly don't mind responding to Skype messages. But the same thing holds true. Every now and then I'm spending a weekend with my family and I may not be in front of the computer, but I will never ignore you. It just may take a minute to get back. I hope everybody has a great weekend. I hope you do a lot of stuff that's fun. I hope you study a little bit, and I'll see you Monday morning bright and early, guys. Everybody take care and be good.